Oh, I can invite you all to studio too. That's awesome. So I will invite you all to studio for the Q&A piece. So make sure to write down your questions throughout. I want to answer all of your questions that you all have. And I know I've been doing it a lot in the free school community. I was in Rob Abasola's his creative camp community on Monday, just answering a ton of Q&A and all that. So I just want to be able to answer all of your questions. But to start off, I'm going to give a very straightforward, well, we'll see if it's straightforward. I'm going to do my best to give you a very straightforward path to financial freedom, explaining the pros and cons of the various routes. And oh yeah, keep on connecting. And then just talk you through kind of my journey, because a lot of people want to know how you actually do the thing. A lot of people may learn about real estate investing. They might learn about the concept, but they don't know how does it actually translate to true freedom, right? Because that's the goal. The goal isn't to own 100 houses or to whatever. The goal is to be financially free, do what you want with your time whenever you want, whenever you want to do it, do whatever it is with whoever you want, whenever you want, wherever you want, all that good stuff, all the W's. So let's get it. I'm going to start presenting now. Let's just get right to it. All right, y'all. So, hey, everyone, my name is Michael Mnatskanyan. I am officially W-2 free. Around 30 days ago, I left my job to pursue real estate full time. I did it probably different than most. Some people leave their job to then build a real estate portfolio, to then be financially free. I'm a little bit more conservative in the sense that I ensured I was financially free ever before leaving my job. I didn't want, with a brand new baby, a wife, I did not want to leave anything to chance. And actually, I went a little overboard with the level of monthly income we have coming in from our portfolio before deciding to leave my job. I'm actually making more from real estate than I was in my W-2. And I'll get into that whole journey with you all right now. So just real quickly, I'm going to go into the highlights of who I am. We're going to go through a presentation, the Financial Freedom Masterclass. I'm going to show you various ways to achieve financial freedom, the way that I did it and what I personally recommend, primarily due to scalability and how quickly it can be done. And then, and yeah, that's it. I'll show you a bunch of resources, give you guys a bunch of free tools, show you how you can just keep on crushing it. So let's get it. If you want to stay connected with me, Instagram is the best way. So Michael M. Nat, Michael M-N-A-T right here. And then we have, let's show the chat. Okay. And then YouTube, it is Intentional Investor. So feel free to stay connected on there. I talk a lot about personal finance, real estate investing, deal analysis, how I'm raising capital by my deals, how I'm lending money to other investors. And you're going to see a lot more content coming out from me. So if you want to stay connected or you want to be financially free through real estate investing, lending your money, raising capital, even some stocks, I'm definitely a go-to resource. At least at minimum, I did the thing, right? So I just want to help other people do the thing. So let's get right into it. All right, so just some of my highlights. We're going to go overview. We're going to go overview of the highlights, and then we're going to get into the actual journey. But I figured let's start with where I'm at now. So I'm a buy and hold real estate investor. I own 53 rentals worth over $20 million. And let me turn that off. I'm going to just restart that if you don't mind. So Elizabeth wants to do the thing. Excellent. All right. So my financial freedom highlights. So I'm a buy and hold real estate investor. I own 53 rentals worth right around $20 million. I could do a more recent comping of my properties to see what they're all worth, but it's right around $20 million currently. And I own in North Carolina, South Carolina, Georgia, Tennessee, Florida, Arizona, Montana, California, only San Diego, Washington, and then I own in Alaska because that's where I started investing, and we'll get into that shortly. I also raise capital. So for the last 2 years, I've only used other people's money to buy my real estate investments, and that is the best win-win scenario, and we'll talk about that. I'm giving someone either solid returns on their money, double-digit returns, or I'm bringing them in as a partial owner of the properties that we're buying. And I'm using that money to then buy the real estate, maybe renovate it, furnish it, whatever. So we're just partnering on these investments. I've done over $3 million of capital raised and deployed. There's a lot more capital that I have raised and just have not had the opportunities to deploy them quite yet. I'm also a lender. I've lent over $250,000 to other real estate investors whether they're looking to buy like they're doing a fix and flip property, they are buying properties as long-term holds, it's multifamily, things like that. I'm lending money out as well, similarly to the way people are lending money to me, and then I'm lending money to others. And the main thought process of that, people ask, why do you not use your own money then to just buy your real estate? Because I want to be able to buy every single great investment opportunity when it comes to me. The only way to ensure that is the case is to not make money a bottleneck. So raising the capital to buy real estate allows me to buy every great opportunity that comes my way. But then I lend all of my money out. Whatever I have left over, I am lending that money out. And once that is 100% lent out, that's perfect. I've done what I need to. I've put all of my money that's available out to work for me. That's why I raise money to buy my real estate, and then I lend my money out that I have available. Additionally, something the real estate community is not a huge fan of, I also invest in passive index funds. So because I have done a lot of wholesaling, I have always had businesses, multiple businesses, because I don't live off my real estate portfolio and had a job up until a week ago. I've been investing a ton of money in passive index funds because it's very passive, and I'll talk about that. What I've been doing recently is converting that into a self-directed IRA and using that as additional money to lend out to other real estate investors. But even if I never touch that passive index portfolio of around $1 million, that thing would grow to, in the next 20 to 30 years, will grow into like $10 million. We can run through a compound interest calculator later to show you what that looks like. I do also own a little bit of crypto. I think I have around $40,000 left. And if you are interested, yes, I have a lot of debt. I am buying real estate with debt. Either I'm buying it with new debt, where I'm taking out a new loan on it. I'm buying properties subject to their existing debts. And that's why I'm still able to buy properties at 2, 3, 4% interest rates. I'm doing seller financing, where instead of going to a bank to purchase the property, I'm buying it directly from the seller, and they are acting like the bank. That's why I have so many 0% interest rate properties, 1%, 2%, 3%, 4%, right? That's how I'm able to still do that, even though other people are paying or were paying, especially 2022, 23, most of 2024, they're paying 7, 8, 9, 10% interest rates, where I've been buying all of my properties at like 5% interest and lower, with a ton of them at 0, 1, and 2, 0, 1, 2, and 3%. I'm not saying this is the goal that you want to get to, but this is just where I'm at. And this is kind of really the start. Now, this was all done while also working full time. I'll go into the overall journey, but I've never made, only up until this year, I didn't even have a full year of it, have I ever made over $140,000. The majority of, or half the real estate that I bought was while I was in the military, and I definitely was not making a lot of money in there. So let's get into it. First, let's start with the foundation. What is financial freedom? Financial freedom, very simply, is when the assets that you own produce more income than your expenses. So if you are spending $5,000 a month, right, the income produced from the assets you own, ideally passively, exceed $5,000 a month. You know, maybe that's what you're currently spending, and you're going to want higher amounts in the future. But true financial freedom is your passive income exceeds your expenses. So you never technically have to work for more money. It'll just continue growing because of your investments. We'll talk about the various ways to achieve that and all that, but let's start with the definition. Ideally, when you are financially free, it is either fully passive or, semi-passive. Maybe you still work on it. Like my real estate portfolio, I still have some work to do. I still have to talk to my CPA, my bookkeeper, my fractional CFO. I have to, have a business partner raising capital. There's still things that I do, but it's not nearly the level of involvement that it used to be because of the way we've been able to scale. And like the stock market, you put the money in stocks and it'll just continue to grow, and you pull out what you need to. That is true financial freedom. You don't have to worry about that anymore. But the thing is that financial freedom is very different for everyone. Everyone has different financial freedom numbers. So depending on what your expenses are, you're going to need a different amount of income. Someone who needs 2,000 versus 5,000 versus 10,000 versus 50,000, they all need different amounts of invested assets that are producing passive income to be financially free. There are multiple different paths to financial freedom. We'll get into what some of the common types are. We'll go through that. It really depends on your risk tolerance as well. A lot of people don't go the real estate route because they don't like the idea of debt or the level of involvement it would take, especially early on. And then one big difference is some people retire after they achieve financial freedom. Some people, like myself, continue to work, just work on my timeline as opposed to on other people's timeline and not working for other people. That's a big one. I love working with people, but I'm not going to work for someone else's business to continue slaving away 10 hours or commuting an hour, working 10 hours, commuting back an hour to help drive the bottom line for a business owner. I'd rather do that for myself. And that, because of the work ethic and the hard work my wife and I put in and the sacrifices that we made over the last roughly 10 years, that's, working even after working your job, working for yourself. That's why we're at the position that we're at. And literally anyone can do it. That's the cool part. So let's figure out how you're going to do it. So there are various levels, at least in my definition, of financial freedom. Financial freedom level 1, which is, in my opinion, the most important, is when you have enough passive income to cover all of your needs. So let's say your budget each month, you're spending $5,000 every single month, but $3,000 of that goes towards your needs, like your housing, food, healthcare, things like that you need to survive. When you have that, when you exceed that expense, that $3,000 a month, that is when you are financially free, level 1, in my definition. Financial freedom level 2, let's say it's that $5,000 amount. You spend $3,000 on your needs, $2,000 on your wants. When your passive income exceeds that amount, that is when you have achieved financial freedom level 2. A lot of people tend to stop there. I think it's too risky, especially if you're going to be financially free early, to just stop at that point. So before I quit my job, I achieved what I call financial freedom level 3, which is where I take my needs and my wants, what I'm spending, and then I double that amount. And that is financial freedom level 3. So if I'm spending $6,000 a month, I'm going to need at least $12,000 a month to be at financial freedom level 3. That's how much I need to generate through my passive income. And then now what I'm working towards is financial freedom level 4. I just call it generational wealth, legacy wealth. Some people think of it as 50,000. So some people think of it as 20,000 a month in passive income, 50,000 a month, 100,000 a month. The world is your oyster. This is no longer dependent on your true expenses. This is just kind of where you want to get to at some point. You just want to keep growing the thing and keep increasing your passive income. This is especially important if you're a real estate investor who is successful. You have a lot of momentum. You've built a lot of your funnels and you've systematized and automated your business. You're effectively raising capital. You got leads coming in frequently. Like, why stop the momentum just because you hit financial freedom level 3? Keep riding it as long as you can, and you'll just be able to go from that, 3 to 6,000 a month to 12,000 a month to 20, 50, 100, wherever your heart desires. And even if, one of my mentors told me when I said, I might be good at this point, he said, you're honestly doing a disservice to the world and yourself and your family if you are not pursuing larger amounts of financial freedom. The main reason being is, even if I never spend more than $12,000 a month, the excess that I have can now go towards very important causes, like things that I care about. I can donate to charity. I can pass it down to my family, help out friends and family, because you obviously have a skill set that allows you to get that generational wealth. You're doing a disservice if you don't actually pursue it. So now that we know the 4 levels, let's talk about the primary assets to achieve financial freedom. So I mentioned earlier a term called FIRE, or financial independence, retire early. The most common strategy for that community, and why I no longer align with the FIRE community, is going through stocks, where you are passively investing in index funds to achieve financial freedom. I'll go through all the math for all this, but just high level, the financial independence retire early community builds up a large enough portfolio where they can pull a certain amount up from their stock portfolio every year and live off that for the rest of their life. And their goal is to just build up this whole thing, achieve that, and then stop working, right? That's the most common one. That really does not align with me, nor did I want to take one of the slower, more guaranteed, but one of the slower routes to get there. And that's why I really got into real estate investing. Ideally, if you are a real estate investor who is financially free, you want to have minimal to no self-management. You don't want to be the one to worry about your tenants, collecting rent, fixing toilets and all that. You really want to be financially free. Your financial freedom comes from being able to outsource a lot of that stuff. So it's one thing to have the cash flow generated from your property and you're the one doing all of the work. It's a whole other thing if you're able to be financially free and you're outsourcing a lot of that work to property management, to handymen, to other people on your team to be able to do that work. Because you don't want to worry, you don't want to be traveling the world and then you get a call that a toilet is clogged. Like, who cares? That would be such a annoying thing to deal with while you're, while you're just trying to enjoy your life and adventure. Lending. So lending is a great path to financial freedom, and we'll talk about the math behind there. But when I think of financial freedom, I think of you're no longer lending as someone who is actively doing like transactional lending, short-term loans, very active. You're constantly driving in leads. You're constantly upload. You're doing new contracts. You're doing all this work all the time for a couple $100 here and there. When I think of financial freedom as a lender, I think of it as someone who's lending out $100, $200, $300,000 at a time to more safe real estate investments, maybe a very, very solid fix and flip, and they're taking your money for 6 months, 12 months, they're taking large amounts of it, or you're lending to buy and hold real estate investors or to multifamily where you're getting returns right around the 10 to 15% range. You're not trying to get 20%, 50% on one deal, which tends to have higher risk, and you're lending them out for longer periods and larger amounts. That's what I think of financial freedom as a lender. There are bonds. I'm not going to get really into bonds and cash, but you could save you could have your money in bonds and live off that income from there. Definitely lower returns than the other ones and lower risk. But there's a ton of risk in there that we won't get into. And then cash. If you just have your money in cash, you have $100 million and you live off that cash, technically you're financially free, but you're going to have to make $100 million somewhere, or, whatever that number is for you. Cash is it's not an investment. Cash is a terrible store of wealth. It's not growing. It's actually losing value all the time to inflation. And that's why I put safe ? Is it really safe that the value of your dollar is going down consistently? No, you want it in assets that are growing in value and then spitting out passive income for you to be able to utilize while financially free. All right, so just a quick chart I made. I did this myself, so I know it's a little wonky looking and it maybe isn't the perfect chart, but it really, I think, in my opinion, paints the picture home. So really on the x-axis or the horizontal axis, I have risk and involvement. There's no math behind that. I just it was subjective, kind of what I thought made sense, and the average returns that you can anticipate, and I show kind of a range. So once again, cash, let's say theoretically, is the least amount of risk and the least amount of involvement. You're just pulling your cash, but it's not growing in value. Like I said, inflation is essentially eating that up, unfortunately. So lower returns, but lower risk and involvement. Bonds in that 4 to 5%, it's a little more risky because it's a little more volatile than cash because the returns fluctuate with time. So maybe you thought you were free at one point, but the returns are no longer there. There are stocks, which I think are still very low risk and involvement. As long as you are thinking of stocks over a longer period of time, you can see massive increases and drops in a short period of time. But if you are looking at this at a longer time horizon, the average return is around 10% every year. But you have to be able to handle that and deal with the volatility of it in the short term. Lending then, which is, in my opinion, more risk and more involvement than stocks. Or when I say stocks, I say passive index funds like the S&P 500, investing in the total US stock market, not just Apple, not just Nvidia, not just one specific stock, but the total US stock market. Lending, I put next on higher risk and involvement than stocks. And really lending, when I talk about it, I'm talking about for the financial freedom side, that 10 to 20% return, that 10 to 20% annualized return. You're lending to a fix and flip investor who is a proven operator. They've done several investments of that type. They're smart and they leverage other people's money to buy real estate. This is the type of money that I am raising when I'm buying my properties, that 10 to 20% range, primarily 12% when I am borrowing money from other investors. And I put that upswing there because you can make a lot more money as a lender. The more transactional, shorter term loans, higher risk you do, the higher returns you can get. You can get 15%, 50%. You can get 100% in 24 hours. Like, there's large amounts of money you can make with lending. But if you're really being financially free about it and putting in very little time involvement, you're going to be doing that longer term loan to more proven operators with less risk. And that's that 10 to 20% range. And then real estate. So I know it's another little wonky thing I put together, but most real estate investors, when they're buying investment properties using their own money, they're looking for at least a 10% cash on cash return. Can you choose to buy property that does not achieve 10% cash on cash return, or like essentially think of the return on investment from the cash flow generated from your property? Yes, you can achieve higher than that, and you can buy properties that lower than that. But the standard is around 10% is what most people are looking for. And I put an infinity symbol at the top because if you're leveraging strategies like myself, where I'm using other people's money to buy real estate, whether it's private money lenders or private money partners, because I have none of my own money in there and I'm making money every single month from that, because my dollar amount is zero invested, my returns are always infinite every time I buy a property. Or you're doing something known as the BRRRR method. That's one of the strategies where you're buying a property, you are renovating it, you are renting it out, you are refinancing, your cash out refinancing, pulling all of your original investment out if possible. Then you're getting all your money back, and you can just repeat that cycle over and over and over again. And once again, your returns are infinite. So this is kind of showing you, in my opinion, the risk and involvement on the x-axis versus the average returns, and understanding that stocks are right around 10% if you're doing passive index funds. Lending on average, I would say 10 to 20% for the financially free mindset people, bigger loans to more proven investors. You can get much higher than that by being more active and doing maybe a little more risky investments. And then real estate, whether you're buying and holding your own money, people are looking for around 10%, or if you're using other people's money, your returns are infinite. That's why I buy and hold real estate using other people's money. And then I lend my money out because I can get a higher return in the stock market, and I have a lot more control of my investments. So let's see. All right. So financial freedom math for the various assets. So this is going to help explain a few things and why certain investments are better than others on the path towards financial freedom. So if you have a stock portfolio and that's how you achieve financial freedom, the rule of thumb is that you can pull out 4% of your invested assets, basically, well, they say over a 30-year time horizon, but let's just say basically for the rest of your life, and you will never run out of money, or it's a very low likelihood you will run out of money. If your goal is to have $100,000 a year of passive income, you're going to need a portfolio of around $2.5 million to pull out 4% a year, which will translate to $100,000, right? So you need to earn enough money to then your expenses need to be less than your income, so you have some savings. You take those savings, you invest in the stock market, it grows in value, and you keep investing, grows in value, keep investing until you get a $2.5 million portfolio. You pull out 4%, and now you have $100,000 of passive income a year, essentially for the rest of your life, with a very high likelihood of success for the remainder of your life. That's great, but the more income you have or the lower your expenses, the more quickly you get there. I'll share at least one story and timelines on an upcoming slide for why this was the path I was on originally, until I realized how slow it was. I didn't want to wait until I was 60 or 65, 60, 55 to retire. I wanted to do it as quickly as possible because I was willing to work towards that. The reason why I love real estate is because not only are you getting the cash flow benefits, which are essentially, cash flow is just your profit, which is just your income minus your expenses minus your reserves on a property. And a cash flow of $6,000 a year is just $500 a month of cash flow for a property. You only need 16.7 homes or 17 homes, investment properties that are generating $500 a month to achieve $100,000 a year. Additionally, you get the benefits of that property is going to appreciate in value. You're going to get the tax benefits associated with it, which is phenomenal. You're going to get someone else is paying down the debt on your loan. So not only are you generating the cash flow to be financially free, right? That's the component that makes you financially free, but you're also getting these wealth generating benefits as well by owning the asset. And the cool thing about real estate, if you're buying in the right markets, the $500 you're making today will more than likely be a lot higher in the future, because you're usually financing this thing at over a 30-year time horizon. Your debt amount is going to be the same. Your debt payment is going to be the same every single month. Unless you change the loan, the debt payment is going to be the same every single month. And, but your rent is going to continue to increase. Yes, some of your other expenses will also increase over time, but typically your rent will exceed that increase. And once again, your property is appreciating on average 5% a year. That's the nationwide average. Someone else is paying down the debt, right? That is adding to your net worth. They're paying down debts on your behalf, and you are saving a ton of money through taking advantage of the tax benefits, primarily depreciation associated with real estate. It's the reason why I have legally not paid any taxes for the last several years, all because of real estate investing. So when I could take that money that I would be paying, let's say $30,000 in taxes, instead of doing that, I can invest in the stock market, or I can lend to other investors and continue growing that, or use it towards real estate. For lending, it's the interest return on the principal balance that you have. So if you have $833,000 and you're getting 12% interest on that money, that translates to $100,000 a year. So instead of needing a $2.5 million stock portfolio, which is generating you $100,000, instead you have $833,000 that you are lending out at 12% interest rate to generate that same $100,000. So it's much quicker, but it is more active than passively investing in index funds, and there is more risk involved. When you lend money out, if you don't know what you're doing, you could definitely lose that money. You can lend it to someone on a bad deal. You can lend it to a bad operator who doesn't know what they're doing. That's why when I think of lending as someone who is financially free, I'm only lending to people who have phenomenal deals. My job is to make sure their deals are great, and then ensure that the operator, the person who's going to do the thing, right, who's taking the borrower, who's taking my money to fix and flip, to buy and hold a rental, whatever, they have a very proven track record of doing that, right? I'm not lending to people, myself personally, I'm not lending people on their very first investment, not even their third investment. I just say, as a rule of thumb, I want you to have done at least 10 deals of that type before I'm the lender for you. You can set your lending criteria to whatever you want, but that's my lending criteria. And for that, I get 12% interest rate return on my money. And that's the same way my lenders think about investing with me as well. I get 10% interest rates, 12% interest rates when I'm raising money, because I'm a proven operator who's done this thing for several years, have a large portfolio. I take care of my properties, right? I take care of my lenders, and that's why I get the interest rates that I do. Bonds and cash, I'm not really going to go into it. I'm not advising anyone to be financially free through bonds and cash. Like I said, if for the 100K, like, you have to know when you're going to die, you're going to, like, how long your lifespan is. And then that's how you're going to determine how much cash you need. I don't know if you're trying to be financially free through cash, like, good for you. I don't know how to help you. My thing is stocks, real estate, and lending, and primarily real estate and lending. All right. This is a fun one. All right. So pros and cons of stocks, real estate, and lending. So I've bolded some of the key items here, but the main pros about stocks are that it's very passive. You just set it and forget it. You could literally, every single month, a certain amount is withdrawn and put in, just, that's how much you're purchasing, like $1,000 a month, whatever. You're just setting it, and it's automatically pulling and investing on your behalf, especially if you're investing in like a passive index fund, like the S&P 500, and it's very well diversified. The S&P 500 is basically the top 500 companies in the country. As long as you believe in the total US stock market and continue to increase the way it has over the last century, then it's very well diversified and it's solid. And the main pro of stocks is that they're very easy to learn if you're just doing it simply. If you're trying to be a day trader, or you're trying to pick the one perfect stock, or a penny stock, or Forex, or what crazy things like that, there's a lot of risk. It's not very easy. It's definitely not diversified, and it's not passive at all. The main con, as I mentioned, is you're going to need probably the most amount of money to achieve financial freedom through stocks. You're going to need to earn solid income to be able to have plenty left over to then invest, let it grow, and it's going to take you a lot longer. It's much slower. And I'll go into some timelines in the next slide. Plus, when you pull the money out of stocks, there are various situations where you're taxed very heavily if you're pulling out large amounts of money. You can actually pay 0% tax for up to certain thresholds, like I want to say $80,000 or something like that. I'm not a CPA, don't quote me, but if you want like large amounts of money, if you want $100,000 a year, 150, 200, we said $100,000, but let's say you want, $500,000 a year, you're going to be paying a lot of tax on that as capital gains taxes. Maybe you'll get some benefits of them being in tax managed accounts, but expect to pay a lot more taxes than through real estate. Real estate is my favorite vehicle, primarily because of leverage. We get to leverage the bank, right? If you're getting like for me, and we'll go through the journey, but like if I'm using my VA loan, I get for 0%, I can take over an asset, 0% down payment. The bank is financing 100% of my ability to buy that property. FHA loan, 3.5%. That's my down payment to take over an asset. $100,000 house, I can buy for $3,500 down payment. That's leverage. Yeah, I'll explain that, James, for sure. You get to not only leverage the bank's debt, if you are raising money, you're leveraging other people's capital to then buy real estate. You are leveraging other people. You're leveraging a property manager to manage your asset, handyman and contractor to fix your property. You're building, if you get to a certain point and you choose to do what I'm doing, where you have a team, you are leveraging them to do a lot of the work that maybe isn't the best suited for you. There's other things you should be focused on. Another huge pro is that there can be infinite returns if you're not using your own money and the properties are profitable, or you're implementing a strategy like the Burr method. Yeah, I mean that's a huge one. Like infinite returns, and you can do it using you can buy real estate using none of your own money. Do I recommend that for someone on their first deal, maybe even second deal? No, I think you should prove yourself early on and then give someone a solid reason for them investing in you and with you. I mean, I guess it's as simple as that. I think, can someone be successful with no real estate investments, raising money, and be a great borrower? Yes. I think it's makes everyone more comfortable if you are leveraging your skills and some of your own capital to buy your first few deals. Maybe you're house hacking it or something, but you doing that helps you massively. Another pro is you have a lot more control of real estate. You can analyze it. You choose the property you buy. You get an inspection done. You choose what renovations you're going to do, not do. You have a lot more control of it as opposed to stocks where it's, you're investing and hopefully it works out, right? Typically it does, but you don't have a lot of control. Oh, my man, Darren Snow is here. That's awesome. Then there's a lot of wealth generation benefits as well. I mentioned the cash flow, which is what allows you to be financially free, but you get tax savings, you get your property's appreciating in value, your tenants are paying down your debt. It's incredible. But the cons, right? I would say it's the most active of this list. Even if you are outsourcing a lot of it, you still have to be somewhat involved. You can outsource a ton of it, but remember, everything that you're outsourcing is at the cost of some of your cash flow. You're giving that up to then free up your time. You're buying back your time literally by giving some of your cash flow to someone else. You could lose the full investment. If you do a really bad, like if you buy a property and it's not performing and you can no longer pay the mortgage, you could quite literally lose that to the bank. Ideally, you're not buying properties in situations where they're losing money, right? When you're analyzing them, I don't know why you would buy a property to lose money. I don't know why you'd pay money or even use someone else's money to buy an asset that's losing you money. Makes no sense. And that's why you have reserves. So if something does come up, you have reserves when you're buying a property, and you have reserves being built up all the time for maintenance and capital expenditures. You got to replace a roof. You got to replace your appliances, the flooring, clogged sinks, whatever. You're saving that money as part of it. Your cash flow is your income minus your expenses minus your reserves. So you're not even counting the reserves as part of your cash flow. That is separated immediately. I would say it's the hardest to learn on this list, but really it's not that hard. I got 26 rentals primarily through just what I learned in books and podcasts and free material. It's not that hard. It took me a while to pull the trigger, and I had to connect with other real estate investors, but it's really not that hard. It's actually pretty straightforward. At least that's what I think. And I do put cons, humans, right? Like I say that because humans are not always logical, right? You have tenants in your properties. You have property managers are people. They're ran by people. You have your contractors out there. There are a lot of human element, which you don't have to deal with stocks. I mean, you kind of do. Like if you're investing in Tesla and Elon Musk goes and says something and the stock drops, right? I guess there is the human element there, but you're diversified through a passive index fund that's aggregating the top 500 companies. Or real estate, you can have a contractor that steals from you or a property manager that steals from you. Contractor takes longer. They damage things. I don't know. Your tenants damage your property. They stop paying. There is a human element. You can minimize a lot of that risk by being a good owner operator, but that's part of the skills that you're developing, and that's part of that harder to learn skills. And then lending, why I love lending, why I'm basically converting all of my stock and passive index funds into lending funds available to lend as opposed to in stocks, is because I get better returns. I have a lot more control of these investments. I can choose where I'm deploying my money. There's a lot of tax benefits, especially when I pair it with my real estate, where even the money that I'm generating from lending, I don't have to pay taxes on as long as I have the depreciation and the tax benefits available through my real estate investing. I would say it's semi-passive, right? That's kind of the language I use. Passive for stocks, the most passive. Lending, the way that I'm talking about it, is semi-passive. It's not fully passive, but it's not that much work. Maybe you lend money out once a quarter. You're always getting deals generated to you. Maybe you're paying someone, we're at that point where you're paying someone to actually analyze the deals and determine which ones do you want to lend on. You're paying them a fee to do that for you. I would say it's easier to learn because the main thing you need to learn is how to analyze the deal and how to vet the borrower, and then what documentation you need to put in place to protect yourself. Whereas when you're the owner operator of real estate, you have to also learn how to actually raise that money. If you're raising other people's money, you have to learn how to operate that asset, either manage the property or pay for management and keep track of them. There's the bookkeeping involved with that. There's a lot more skills that you need to develop than just lending, where you're just learning, does this deal make sense? Do I trust this operator to perform, right? Those are the big things you're learning. So I would say it's semi-easy to learn, not as easy as stocks, but much easier than actually being the real estate investor themselves. You could even lend, not just for 10, 12, 20% interest rate return. You can lend money. Some of my partners lend money to me and we buy the house together. We literally own that asset together. You can own assets through lending. Once again, there's the control benefit, the deal analysis. I just mentioned the potential ownership benefits. The downfall of lending, similar to stocks, is you need money. As I showed you, instead of needing $2.5 million stock portfolio, you need only $833,000 at 12% interest rate to get the $100,000 a year you're looking for. You can, if you are lending on bad deals or to a untrustworthy or unproven operator, or even a proven operator on a good deal, you could still lose that full investment if things go totally wrong. However, you can mitigate that risk. There's a lot of things you can put in your contracts to protect yourself. If the borrower doesn't pay you on time, you can actually take over that asset. There's a lot of things you can do to protect yourself. And, there's the right way to lend and there's the wrong way to lend. You should be lending the right way, especially at large dollar amounts. And they're once again, similar to stocks, you're going to pay a lot of taxes. It's similar. It's capital gains. However, if you're pairing that with real estate, you're not paying taxes anyway. You're taking your real estate losses on paper, the depreciation, to offset all of the taxes from lending. All right. This is a fun one. So let's get into this slide. So this is something I just put together. Once again, don't hold me accountable. I just want to give you an example. So this is basically the different timelines to achieve financial freedom. I gave you one for stocks. They're all assuming the same income, the same expenses for the same person. Everyone's starting at the same age. They're all saving the same amount. They're just investing it differently. So the person is starting with a $70,000 income. I did this for every single year. I just couldn't put from 25 to 50 all on this slide. So I had to batch it every 5 years just to show you the high level. So in this scenario, you're starting off at a $70,000 income at 25 years old. And your expenses, you're using 75% of your income towards expenses. So you're saving 25%, which is far greater than the majority of this country. Like on average, if you do 25%, you're in like the top percentile of savers and investors. But just to paint the picture home, so in that instance, you're technically taking all of your savings, you're investing it, right? You are investing it. You're investing all of that. And then using the 4% rule that we talked about, 4% of your invested balance is what you pull out, and you could live off that if you chose to be financially free at that time. Running through this scenario, you would need to be 50 years old. If you continue investing 75% of your income, starting at 25 and your income 70,000, at 30, it's 88,000, 35, 110,000, 40, 133,000, 45, $106,000 of income. You're investing $40,000 a year at that point. It would take all the way until you're 50 years old to become financially free. You would have a $2.7 million portfolio, and you can withdraw 4% of that basically and live off that for the rest of your life. And that would translate to $108,000 of passive income generated from your stock portfolio. And just to really paint the picture home, I just read the story today. This is a guy who was way ahead of this curve, and still it'll take him way longer than it took me to be financially free. So he got his master's of engineering at the age of 23. I barely finished my chemical engineering degree at UCSD at, I believe, 23 years old. So he got a whole master's. He's way ahead of the curve. He spent the last 6 years working at a Fortune 500 company. He's making $145,000 a year now. He's got literally everything going for him. He's 100% in stocks. And he started his income around $75,000 at 23. I definitely did not in the military. And you'll go into my journey a little bit more, but I was not making that much money at 23. And I only just this year was making $144,000, I believe, if I stayed this whole year. And that just started in July. I would have made $144,000 in my salary in my government job at the end of this year. So he's already ahead of where I was income-wise. He's currently 29 years old and has a $370,000 net worth, which is massively impressive. He's way ahead of this schedule at the 30-year-old mark. He's got $200,000+ more than the 30-year-old in this example that I'm showing on this table. So from his $12,000 a month income, he is currently investing $6,000 a month. And you guessed it, the reason why he's able to invest 50% of his income, he lives with his parents. He pays them $800 a month to live with his parents, saving him. He lives in New York, so he's saving $3,000 a month that he was paying in rent, and he's instead paying $800 to live with his parents. Even with all that, one of the most perfect scenarios for financial freedom through passively investing in index funds, it'll still take him 13 more years to be financially free, to have that $2.5 million portfolio generating $100,000 of passive income. So he will be 42 years old in his perfect scenario. So 8 years faster than the example you see here. That is why I had to pivot. I didn't want that to be me. I didn't want to be 65, 60, 55, 40, whatever. I wanted to do it. I wanted to work harder earlier to then be able to achieve financial freedom sooner so that I could then do what I wanted to do. And honestly, the crazy part is the only things you can do to accelerate your journey to financial freedom through stock market investing is you got to increase your savings. And there's only two ways to do that. Increase your income, decrease your expenses. That's all you can do. This guy increases income solidly, making $145,000 as a remote worker. And his expenses were extremely low in the grand scheme of things. And he still is not able to, he still will retire at 42 years old, right? If you are lending, we're not going to get too much in the weeds with lending, but assuming the same amount of income, expenses, and savings, but instead of putting in the stock market, you start immediately lending that out as a real estate investor. To real estate investors getting 12% interest rate return as opposed to the 10% that you'd get in the stock market, you would be able to achieve financial freedom at 40 years old. So you'd have an investment balance of around $941,000 at 40 years old. That's how much you have invested and lent out. And that's generating you $112,000 of interest each month. So $941,000 is the principal amount that you are lending out. That money still stays, right? That holds and that continues to stay there. But now you have $112,000 a year coming from that passively at 12% interest rate. So that's why, just because of the interest rate alone, the interest, 12% interest versus 10, you're going to be able to retire almost 10 years sooner. Tremendous. And then real estate. So this one's a lot harder to model. The income, expenses, savings really didn't matter in this simulation. I'm just saying every 5 years or every year, starting at 25 years old, you're going to buy one property. You're not going to buy 10. You're not going to buy 50. You're going to buy one property every single year, which is way slower than I did. I'm just wanting to show in a more realistic scenario for most people. So at 25 years old, you're buying a property. 26 years old, you're buying a property. Maybe all you are doing is house hacking a single family home, a small multifamily. You're putting some money towards a investment loan. You're putting 25% down to an investment loan. You're leveraging creative financing. I didn't even run this scenario if you were using other people's money to buy real estate, because you would have seen my trajectory. Less than 30 years old with what I have. What that far exceeds all this. So you're adding one property, and then starting at 30, you're more comfortable now. So now you're adding 2 properties a year. 35, you're adding 3 properties a year. Starting at 40, you're adding 4 properties a year. Even with just 1, 2, and 3 at 35 years old, assuming $500 a month of cash flow, which is not that insane. I have plenty of properties that are generating 1,000 plus, 1,500 plus, 2,000 plus, especially my small multifamilies, especially and my creative finance properties. This is extremely realistic to be able to do. And you're just saying one property a year. So you spend 12 months finding one investment, and that's the one you do. Maybe you're the one who's managing. Maybe you're doing all that because it's a smaller portfolio. And to achieve financial freedom, you could do it at age 35 with only 18 properties, generating you $108,000 of cash flow a year, which is essentially going to be tax-free because the tax benefits associated with real estate. Not only are you financially free through the passive income, the cash flow, but you are also getting the wealth generation benefits. Your assets will continue to appreciate in value. Those 18 houses will continue to appreciate in value 5% a year on average. You will, you're going to continue getting those tax benefits. So that $108,000 is actually money that you are generally getting. And then what do we say? Taxes, appreciation, and then debt pay down. Every single month, someone else is paying down your debt. I have a property now. Every single month, the tenant is paying down $4,000 of debt on my behalf. They're adding $4,000 to my net worth. I don't make a ton in cash flow on that one property, but I do make $4,000 every single month because a tenant is paying down my debt on my behalf. It's beautiful. It's literally amazing. It's building my net worth without me having to do any of the work on that end because it's all outsourced. Could I make more money if I was doing the management, if I was trying to drive more income by being a more active manager, doing some of the rehab? Sure. I'd rather make less cash flow on that, but still get the massive benefit of the debt pay down. When you're starting out though, when you want to be financially free, it's going to come from the cash flow. It's great to build your net worth through appreciation and debt pay down, but that's not going to matter. That will not translate to financial freedom unless you're getting that cash flow or you're taking that equity and doing something with it. So I just wanted to paint this rough scenario, just kind of freestyle some numbers, but it is pretty realistic. I mean, remember, I'm a chemical engineer. I'm an engineer by trade, so I'm pretty good at this stuff. I have the #1 creative finance calculator, so I'm pretty good with numbers and spreadsheets and simulations. But this is just to kind of paint the picture of why I prefer real estate and lending with my free income as opposed to the stock market investing. If you want to be passive, you want to earn a lot of money, save a lot of it, invest it all passively, not worry about it, and do whatever you want after work, go for it. For me, it made more sense to spend an hour or two a day after work or during lunchtime, before work, whatever, and build my own business, build my buy and hold real estate business to accelerate my path, to start lending money out to accelerate my path. And that's why I was able to retire at only 30 years old. Technically, I was financially free at 27 years old, but we'll talk about, that was level 2. Level 3 came, I guess, recently. And just, I wanted to wait till after the birth of my baby and all that good stuff. And we'll get into the journey now. But I did this last minute. I created this slide for you all so you can really see the timelines, because people don't necessarily see how it's tangible. Like, what do you actually need to achieve to get there? Like I said, 18 properties at $500 a month of cash flow. Starting at 25, it would take you 10 years. Even if you start at 35, you start at 55, you start at 65, 75, whatever. 10 years buying one property a year until 5 years later, then you're skilled now. You're buying 2 a year. At that point, right, all you need to do is buy 1 a year for 5 years, then buy 2 a year for the next 5 years. You are literally financially free through real estate. Not only do you get the cash flow from it, but you also get all the other wealth benefits. So this one is an amazing one that I'm glad I put together last second for you all. So let's get into my journey. I know this slide is crazy. I'm going to have to move my face later, but let's get into it. So I talked a lot about financial freedom in general. Let's talk about my journey. So in 2012, we talked about childhood. So I'm going to get right into when I graduated high school. Graduated high school in 2012. And at the same year is when I met my now beautiful and amazing, well, she was beautiful then, but my amazing wife. I met her in 2012, and we've been together since high school. So we've been together for 12 years now. That's amazing. And at that same time, that's when I started UC San Diego. As I mentioned, my family did not have any income. I did not get the financial support, and it's not their fault. They literally couldn't. I did not get any financial support for college, for anything. That was on me, and that was fine. I don't mind working hard. I worked all summer before school. I volunteered and worked several years during high school, and even UCSD. I was working at the dining hall as part of a scholarship that I received. It covered part of my tuition. I still had some college debt, like a lot of people do, and I was working 2-3 jobs throughout that journey. But I was working at the dining hall 10 days before the first ever class. I was working at my school before I even studied a single class. That is what I had to deal with. And I still got my engineering degree. I still was able to do all this. So just to put it into perspective, I didn't get the financial aid that I would have liked. I did get a lot of education-based scholarships. Maybe half my tuition was covered through that. And then I worked for the rest and took out some student loans. Let's fast forward to 2014. So that is when my wife moved and joined me in San Diego and started her schooling in San Diego as well. At that point, for my whole life, I was going to be a doctor. I was going to be a cardiovascular surgeon because it made a ton of sense to go to high school, then college, then, get my doctorate or whatever, all of that stuff. I don't know, whatever the path is. And at 30 years old, start making a couple $100,000, maybe make 500,000 eventually, or $1 million. That was kind of the plan there. In 2014, I started learning about the financial independence retire early community. The number one thing was the earlier you invest, the longer time horizon you have for your investing and compound to occur, that much easier it is to achieve financial freedom. So the earlier you are investing, the more your wealth will grow passively for you. So I shifted at that point. I said, you know what? I'm studying very hard. I'm doing really well, but I don't feel like I am genuinely learning the way that I would like to. What I am doing is I'm taking a test. I'm anatomy, biology, whatever. And then I feel like I'm forgetting things. If I'm paying for my school, if I'm working 2 jobs at that point to pay for my schooling, I definitely want to ensure that I'm learning a ton of stuff that can be applicable to the future. And I honestly want to start my path to financial freedom much sooner than 30 years old. I didn't want to go to school. I didn't want to be a doctor. I didn't want to be 30 and eventually make a few $100,000 a year by working all the time. Like working the way doctors work. That just wasn't the right fit for me. And I shifted to chemical engineering at that point. 2015, at that point, I was working 3 jobs. I was working 2 on campus, and I was working an environmental engineering internship. 2 of them, well, I guess all of them were technically part-time. 2 of them were more focused in regards to my area of focus, and one of them was just a job. Still working in the dining hall. That was the last year I worked at the dining hall. And that was when my mom also, unfortunately, but fortunately, introduced me to options trading in real estate, or options trading in the stock market, which is higher risk, higher volatility. And I lost a couple $1,000s, and that was heartbreaking because that was student loan money that I lost. And that was unfortunate. And it was because I just don't have, first of all, I don't have the patience to sit there and watch a stock chart and, not emotionally decide when I'm going to do something. Like, if you know anything about options, it's quick. Money comes and goes very fast. You have to be watching every second. It was not the thing for me. But after that point, I just started investing passively in stocks, as I put in there, fire start in 2014. So financial independence, retire early. Let me explain the table in the bottom. So my years to retirement is the top, and then the year it was is in the bottom. So in 2012, the plan was still, I'm going to be a doctor. I'm going to make a ton of money. Starting after 30-ish years old, I'll make a ton of money. I'll invest it, and I'll eventually be free and retired. And I'll have a ton of money. I didn't have a real plan. I didn't know. I just knew I'd be making a bunch of money as a doctor, and that was the goal. 2014, when I started learning about the financial independence retire early movement, or the financial independence retire early movement, primarily through investing in passive index funds in the stock market, I said, cool. I have a realistic plan. If I save around 20% of my income, 15 to 20%, I'll be able to retire at 65, which, everyone thinks, oh, that's retirement age, but there's plenty of people, a ton of people working at 70, 75, 80 plus years old. So retiring at 65 years old is still way ahead of the curve for the majority of people. But at that same time, I said, you know what? I don't want to go the doctor route. I'm going to pivot to the engineering route. And in 2015, after saving some money, I invested in my first stocks. Really, it was options, lost a couple grand, but I didn't let that discourage me. I just said, I will not trade options. That's not the right thing for me to do. I'm going to invest passively in index funds like the Financial Independence Retire Early Community states, right? In 2017, I graduated high school. I graduated at UCSD. I, got my, so I studied a lot. So the way UCSD worked is you could take as many classes up to a certain unit count, and it was all the same cost. So I said, I'm working 3 jobs. I'm paying all the way for my school. I am going to freaking make the most of my education. So what did I do? I got my chemical engineering degree, took plenty of business classes, took plenty of computer science classes, got a minor in environmental studies because I am very passionate about the environment. And right after I graduated, I started the process to commission as an Army officer, as an environmental science and engineering officer for the Army. Little did I know at that point, the process takes around a year because they only hire around 4 people at a time, all on like a certain cycle. And I missed that cycle, so I had to keep waiting. At that point, I was still working as an environmental engineer. I was working as well as a sustainability consultant until I realized that was not the path for me. That was not the way that I wanted to, take care of the environment. I started my own business, The Sustainable Switch, selling reusable straws to other people, primarily to other businesses. And the idea was I saw for every time I saw a straw at a store, they're selling it for $4 or $5 at the time. I looked it up. I know everyone's getting the same things from China. And I said, wow, it cost 30 to like 50 cents for that straw. But these stores they're charging $5+ for it. All I need to do is make it much more accessible and I could dominate this market. And the main reason for that is I just wanted to make sustainability more accessible to as many people as possible. If someone chose to use a reusable straw over plastic, awesome. I would help them do that affordably. So what I did was I would get the same products like everyone else, but instead of charging, the wholesalers would charge businesses $2, $3, $4, I was charging 90 cents to $1.50. I was still making 2-3x my original return, but I was driving down the price of the entire market to make sustainability more accessible for others. I continued that business for several years until moving up to Alaska. Totally slowed it down, but we'll get there. In addition, while I was doing the environmental engineering job, I actually started a position as a leasing specialist at a large apartment complex because I wanted to learn some about real estate investing. And I know it sounds kind of funny, but I had an inside track to do this job. It did not pay well, but it was temporary until I started the military, and I only did it for a few months. And I'm so thankful that I did that position, because one of the days the owners of the apartment complex came into the office, and me as an analytical person who's inquisitive, I started asking them a lot of questions about it, and I was really flabbergasted they could just own a large apartment complex as individuals. And they mentioned what they do is they use other people's money to buy real estate investments, large apartment complexes in San Diego, tens of millions of dollars, maybe, I don't know, maybe even 100+ million, for all I know, tens of millions of dollar apartment complex San Diego. They'd buy them and they would do the BRRRR method. They'd buy it, they'd renovate the units as they became available. They would rent them out at a higher rate. Then they would refinance their money out, pay back all their lenders, and now they owned another large apartment complex. And they did that over and over and over again. At that point, I had no thought, wonder, concern in my mind that I would be on that track. But it was amazing insight into what are some of these very successful people doing? How are they leveraging other people's money? How are they able to generate tons of wealth and buy real estate using none of their own money, get their money out, pay their lenders? It just really opened my eyes to what was possible. I had no thought that I would ever, like I said, own 50+ rentals and have a $20 million portfolio. I just thought, wow, this is amazing. I'm going to start learning more about real estate. At the end of 2017, I was around 42 years from retirement. Really, I was still on the same track as I was in 2014. In 2014, I was just 3 years ahead of that journey now. 2018 is when I officially commissioned in the Army as an environmental science and engineering officer. I went to Oklahoma for training. And during training, there was, after working out, eating, and training, there was a decent amount of available time. What I started doing was learning about real estate investing. Started listening to all the podcasts, downloading them so I could listen to them even when we didn't have service. I downloaded a few books on my phone and I was reading them when there was time. And then I was also learning how to underwrite and analyze investment properties. In 2018, I was just maybe 1 year ahead of where I was before. So maybe 41 years left, to be 65 years old and retire. Still, even through the FIRE movement, right? I was still going to go the stock market route because that's kind of all I knew at that point. I didn't know how real estate would play a role. I just knew it could really help accelerate my journey. 2018, moved from Oklahoma to Texas for more training, several months there, and then moved to Alaska, where I was stationed at Fort Wainwright in Fairbanks, Alaska. I want to say like the second or third largest city, town in all of Alaska, which is not saying a lot. It was around 30,000 population. But one thing I did notice is my wife and I lived off base. We lived in a 2-unit. We lived in one unit, and then actually not the owners, another tenant lived in the other unit. And I thought, this is pretty cool. So I'm living in a 2-unit property. Someone owns it and we're both living in it, both paying rent. That's pretty interesting. So I got very interested in small multifamily and started analyzing every single small multifamily real estate property in the entire Fairbanks market because I knew my first real estate investment was going to be a small multifamily property. I would use either my VA loan or an FHA loan to put low money down to acquire this asset, live in a unit, and rent out the others. At that point, I was analyzing tons of properties. In 2019 alone, I analyzed every single investment property, small multifamily that was on the market, even some that previously sold to see how my analysis skills were. And I joined my first real estate investment association. That was the best thing possible for me because not only was I doing this thing by, and that's where my friend Darren right there, we met there too. That was where I started feeling much more confident about what I was doing because not only was I analyzing things on paper, but I was talking to investors and asking them, hey, are these the numbers that you're getting? Would this be an investment that you buy? So I was trying to prove, okay, this is something that I should be doing. Like these are investments I should do. Honestly, the feedback I got too was that I was analyzing better and more than a lot of the other real estate investors who were actually buying properties. I was analyzing properties and they were buying properties. So in 2020, in March of 2020, at that point, I analyzed 100 plus properties. And I said, man, you know what? I'm analyzing real estate. I've spent 2 years learning at this point. However, I am never actually going to be financially free by just analyzing properties. You have to get an investment property. You have to see, like the lead has to come in. You have to analyze it. That's not where it stops. You don't own a house by analyzing it. You have to then make an offer, right? Get that offer accepted, conduct your due diligence, and then close on that property and then manage and own it after that. If I was not making offers, if I was not going through my due diligence, getting under contract, doing my due diligence and closing on them, I would never own real estate. So I told myself, Michael, you spent too much time analyzing investments. The next property that makes sense financially on paper, and this was plenty of properties made sense on paper, but I was stuck in something called paralysis by analysis, where I was analyzing, but I couldn't make the next step. So I had to break it down to a very simple system that I just mentioned to you. You do these actions over and over again. That's how you buy real estate. Right? If a deal makes sense, then you do the next step. Just keep progressing. If it keeps making sense, I told myself the next one that makes sense on paper, I would make an offer. Then I would do my due diligence and then I would close on it as long as everything looked good. So in 2020, March of 2020, right around the 20th, 21st, 22nd, right when the United States officially started with COVID, like we had a little bit of COVID. There was people stuck in a cruise ship at that time. I was just getting back from Spain right before the country completely locked down. That was crazy. I almost got stuck in Spain. There was a 2-unit property where everyone else was completely afraid of doing anything because COVID, the banks were a little hesitant, like no one knew what to do. I made an offer on a 2-unit property that my plan was to house hack it. This property was one that we could renovate. We closed on it. We put it under contract near the end of March. It took longer to close. It's almost a 2-month close at that point. It was hard to get an appraiser. COVID shut things down, slowed everything down. I didn't really mind at that point, but we closed on it near the end of May. My wife, myself, and my best friend in Alaska, we went and we renovated the unit to then get the new tenant in there. It needed some cosmetic renovations. We renovated it. And within the same week, we got my first tenant January 1st or June 1st. So before May of 2020, I never owned a single property. By the end of May of 2020, I owned my first 2-unit property and I was generating $1,000 a month of income after living rent for free. So the thing about Fairbanks, Alaska, it is a high cash flow market because it is very transient. There are a lot of people that come in and out temporarily for military, for education, for housing, or for military, education, and healthcare. And a lot of them don't want to own in that market. The numbers made too much sense to not own, in my opinion, because with this one investment, I lived for free and made an additional $1,000 a month, or would make $1,000 a month after I moved out. So in the meanwhile, I was making $1,000, or I was living rent free, which was helping me save money to then invest more in the stock market. That's why you see my journey from 2017 to 2019. It was only 2 years, but my journey went from 42 years to retirement to 35 years. So I accelerated that massively by my wife and I delaying a lot of gratification. We were investing a lot of our money. Basically, my wife's entire salary was going towards the stock market. So because we had such a high savings rate, we accelerated our journey. In 2020 alone, through that one investment that I did, I then pushed it. It was only 1 year later. I pushed my timeline 10 years faster because now I'm no longer paying rent. Even when I moved out, my tenants, I would be earning an extra $1,000 that can then also be invested. It was such a no-brainer at that point, and it really blew my mind to like, wow, I can retire much sooner than I thought. 2020, so how old was I then? 26 years old, 25, 26 years old. I thought, wow, I'll be able to retire in my 50s now, not 65. This is incredible. I love real estate. I'm going to keep doing real estate. I'm going to keep learning. At that point, though, I was only going to house hack multifamilies using low down payment options, VA loan, FHA loan. I started learning about something called wholesaling, where you are essentially putting a property under contract, like a good investment under contract, and you're selling that contract to another investor who would be the end buyer for it. They are the one who is going to fix and flip it. They're going to be the one to buy and hold it, whatever. And I started doing that out of state in Huntsville, Alabama with another partner who wanted to start this as well. And I started doing a little bit more in addition to that. I ended up wholesaling maybe a dozen deals that first year, we're splitting around $10,000 assignment fees, made an extra 50 plus K that I was able to then invest into the stock market and just keep investing it. And that was a great time to invest in the stock market. So because I used a low down payment option to buy my 2-unit using my VA loan, and because I was making more money through wholesaling, I was able to funnel that money into the stock market, further increasing my timeline to be financially free. Well, 2021, everything changed. Went from 25 years to 0 years. And let me explain why. I was financially free by September of that year. So my wife and I, we house hacked our next property, which was a 4-unit. The first property that once we moved out, generated $1,000 a month of cash flow. The 4-unit was generating $2,000 a month in cash flow. So I went from 0 cash flow in the middle of May 2020 to $1,000 a month to then $3,000 a month in the middle of May 2021. Game changing while also living rent free. We renovated those units as tenants would move out and then increased the rent for the newer remodeled units. I actually started my first mentorship after that house hack because I realized, wow, I am successfully house hacking properties. I don't really like using a lot of my own money to buy real estate. I love doing it with the low money down option. And I was successfully cash wholesaling out of state. So the first mentorship I did was one where I wanted to learn how can I buy properties using little to none of my own money. That doesn't mean using other people's money. I was using the seller's money, doing something called seller financing. So I'm buying the property from the seller. They either own it outright or have a very small loan that will be paid off. And they in turn are now the bank. The reason why that's important is if you are buying an investment property the traditional way, more often than not, unless you're house hacking it, which you could do no more than one a year, even that starts getting tough after a while. But if you're buying an investment property that you're not you're not living, you're just renting out, you need 25% down payment. So I thought that's not going to work. If I'm trying to buy $200,000, $300,000, $400,000, $500,000 properties, for $400,000 property, I would need $100,000 for the down payment. That was not going to work. There's no way I was going to save enough money to be able to do that successfully and scalably. So that's when I started learning about seller financing. And I remember the mentor of that group, give him tons of credit. I questioned him. I said, I've bought 6 rental properties that are generating me $3,000 a month. You want me to pay you $3,000 to learn about seller financing? I see a lot of info online already. Why should I pay you any money? Because I've been able, for less than $20,000 down payment, I've been able to buy 6 units. Why should I pay to learn this thing from you? I can't even quantify the return on investment. And he just opened my eyes and said, you can pay the $3,000 and get literally nothing from it. You can pay, and if you're not going to take action, if you're not going to learn and then take action, you're going to get no benefit. You just lost $3,000. But if you learn and implement this thing, what will the return on investment be if instead of putting 25% down, you put 20% down, 15% down, 10% down, 5% down, 0% down even? What would the return on that be? And it for my logical brain, that actually started making a lot of sense. I couldn't quantify it, but I could feel the value of that. And I said, you know what? I am definitely going to be doing this. This makes a lot of sense. And that was May of 20, right after I did the 4-unit, May of 2021. My wife and I started this program, we were learning how to find off-market opportunities. I was already doing that through my wholesaling. I was learning how to do off-market, but there we were using virtual assistants. We were paying, we were texting people. This was a little more authentic. This was a little more personable. We were essentially handwriting letters and sending them to investors in our market. So what I was doing is I was looking up every 2 to 4 unit owner in Fairbanks, Alaska. I was handwriting a letter and asking them if they'd be interested in having a discussion about selling their property. The goal for me was to sell or finance one of those properties and to be able to buy it with little to no money down, and then for it to be cash flow positive, and that would result in a high cash on cash return. My wife and I wrote over 250 letters, maybe closer to 500. I had over 25 appointments with different owners of 2 to 4 unit properties in the market in Fairbanks, Alaska. Some of them were very unreasonable. The prices they wanted wouldn't make sense. They were not open to seller financing. Maybe they'd sell at a discount if I did this or whatever. But there was one owner who stood out above the rest. He said, I have a 2-unit property that I own outright. However, I don't really want to sell it. I'm moving out of Alaska, but I want to leave one of the units vacant so I can come back anytime that I want. But I do have 20 rental cabins that I'm willing to sell creatively. The problem here is that I want $800,000 for it, but there's a $400,000 loan on this property right now. There's a $400,000 commercial loan on the property. So the only way for me to sell it would be to pay off that loan, and I did not have $400,000. So I had to figure out another way to do it. Because if you want to sell or finance it, the seller has to own it outright or you have to pay off the debt for them to finance it for you entirely. If you are more sophisticated with creative financing like I am, you might think, why not subject to that loan? Commercial loans are very hard to subject to because they're audited much more frequently. Every year on my commercial loans, I'm being asked for a lot of documentation. You can trigger the due on sale clause much more easily and really mess up that investment. You can assume you can assume a commercial loan depending on how it's drafted, but that wasn't even on my radar at that point. I didn't know about assuming loans or anything like that. So I said, okay, you have this $800,000 property, $400,000 commercial loan that needs to get paid off. What is it that you're overall looking to accomplish? He said 2 things or a few things. I want to sell this thing for $800,000 because that's what it was appraised for, like $805,000. I want to sell it for $800,000, not a penny less. I need $125,000 for a purchase I'm doing in Denver for a property that I'm going to own or occupy. A new property for him. He needed $125,000 for that, and he didn't want to worry about these cabins when he moved out of Alaska. He only wanted the duplex in Alaska so he can go back and forth from it when he wanted to visit, but he did not want to own much more property in Alaska. He was older. He was kind of done with that. So I said, okay, excellent. Let me see what I can do. You have an $800,000 purchase price, right? $400,000 of debt. So it's $400,000 that'll be left over that you will get, right? Minus fees and all that, you're going to get $400,000 of that, roughly. He only needed $125,000 of that. So there was $275,000 to play with. Well, I said, okay, well, I need to get a new commercial loan. If I take out a whole new loan, a commercial loan, the bank is going to require that I put a 25% down payment. Okay. 25% of $800,000 is $200,000. I did not have $200,000. I said, well, the seller is willing to finance me my down payment. Can he finance back that 25% and I'll just pay him monthly instead of the 25% down payment to you guys? They said, no, you can't do that, but you can do 15%. He can seller finance 15% of it. We need you to put 10% down because we need to know you have skin in the game. Well, even 10% of $800,000 is $80,000 plus closing costs plus some renovations I wanted to do. I was going to need around $130,000 to buy that property. Once again, I did not have $130,000. I talked to the seller and I said, if I get you $125,000, you never have to worry about this property again. You don't have to worry about any of the tenants, management, anything like that. You get the 125, you don't have to worry about this property, and you get the $800,000 sale price. Would you be willing to work with me and finance me more of it, even though the bank's not allowing it? Would you be willing to finance me after you get paid out? Would you be willing to send me the money back, and I pay you monthly over time for that? And what we call that in the sub-2 community is a Morby method, or I call it a seller carryback post-closing. So I got a new loan. It paid him out what he was left over after his existing loan was paid off. He took what he had and he lent it back to me at a 5% interest rate, better terms than the bank was actually offering at the time. well, I negotiated, right? And I actually got paid a couple grand. By the time everything was said and done, I got paid money to buy that property. But I needed to come up with that 10%, which was a crazy story. I had less than 30 days to come up with $130,000 to get this deal done, get it closed. They send him a check for his money so then he could send the money back to me. So I need to come up in 30 days with $130,000 temporarily until he could pay me back that money. I could pay off what I need to. So that was the first time I started raising capital. I reached out to other military service members and I said, hey, if I give you solid return on your money, I gave them like 12% for 30 days. So I gave them a solid return on their money. If I give you that, are you willing to lend money to me? So maybe a third to a half of that money was raised from two other members of the military who funded that piece. I still had to come up with another 60, 70-ish $1,000. So what did I do? 11 other sources. My wife and I sold some stock. We exhausted all the cash we had. We took out some credit card loans. We took out loans against our stocks, loans against some crypto that I had. We sold some crypto. Everything you could think of, every source of money. I had some money in a HELOC from the first investment. I tapped into everything I could to come up with that money. Got the deal closed, literally just enough money to barely get the deal closed. Right after closing, he wired. I didn't do it the right way at all. I did it. I got very lucky that the seller was very reasonable because there was nothing contractually that was going to require him to give me the rest of that money after closing for me to pay everyone off. So I didn't even think through that because I didn't know the process, but I knew I was going to get this done with little to no money. I got it done, raised the money, closed on it. He sent me back the funds. He sent me an additional $130,000 to pay everything off. And I ended up making a few grand on that purchase. Not only did I make a few grand on the purchase, more importantly, for no money down, right? I made a couple bucks. I now had another asset that was generating $3,500 a month for me in cash flow. So between my first property, which generates $1,000 a month, my second property, which generates $2,000 a month, and this property, which generated $3,500 a month, I had $6,500 a month in cash flow from 3 investments at the age of 26, 27. I just turned 27 at that point. And that was far more than my expenses. That was far more than my level 1 financial freedom. That was way more than my needs, which were around $3,000 a month at the most. It was even less, right? Because I was getting free housing by living in one of my units, but I knew I need to pay for that at some point. And then my wants, which were around another $2,000, $2,500, primarily on travel and things like that. My wife and I don't waste money on unnecessary things, flashy things. We don't need the fancy cars. We don't need things to impress other people. We just do what we want with our life, with our time, adventure, and enjoy the world the way that we want to. So I was roughly needed $5,000 to $5,500 a month. I was generating now $6,500 a month at that point, passively. That's why I say I was financially free at level 2 financial freedom in 2021. So I was done. I did not need to do anything else to be financially free for the rest of my life. However, I decided, you know what? I'm 27. I have a phenomenal degree. I can make 100,000 plus. If I just work the job, I can keep buying real estate. I'm going to keep this going. So then I reset and said, you know what? I created financial freedom level 3. I'm going to get twice as much as this essentially, and then I'll be financially free. But at that same time, because I had all these passive income streams, I had these skill sets, and I had a great degree, I knew my time in the service was done. I joined the military for one reason and one reason only. I was a chemical engineer. I had the option to work in the oil and gas industry, making almost twice as much as I was making in the military. I chose to go the military route as a thank you to our amazing country for all the opportunities that we have. As a first generation American, to me, one of the most important things I did was serve for our country. And I was never the guy who wanted to go to war. I was the guy that wanted to protect our soldiers. So what I did in the military was protect others. As an environmental engineer, focused primarily on environmental health. I was the chief of environmental health for the state of Alaska in the military. And my goal was always to protect soldiers. And at that point, I had to start protecting myself. I said, you know what? I've done my service. I've done an amazing 4 years. I've had a great time. I've given a lot of value, but I'm not going to risk getting deployed, injured, leaving my family, having to move every several years with my family. I'm not going to do that. I've done my time. I'm going to get out. So I officially told, my Army recruit, Army HR, that I would be getting out when my service is up in 2022. That's why I made a decision. I I would be out in 2022. So I just spent the rest of that time stabilizing my portfolio, fixing everything up, getting everything ready for my move out of Alaska. At that point, financially free, but I had higher goals now, right? I needed double. And based on my trajectory, it would take approximately 2 more years to do that in 2022. So what I ended up doing, because I bought my first property using a VA loan, I wanted to free up that VA loan to purchase another property at a much higher value, because I knew I was moving to San Diego. And I'm not going to get into the nuances of it. I actually have a great YouTube video on this topic, but for the most part, you can only have one large investment using your VA loan, or large purchase using your VA loan. So I sold my first property. My wife and I renovated it. The market did great from 2020 to my wife, or actually it's a lie. My wife, my best friend and I, he was a tremendous help, renovated the property, increased the value, maybe $100,000. And the market did another $100,000 for us just from 2020 to 2022. Anyone who was an investor or watching anything or trying to buy a property or whatever during that time period, how crazy the market was. And I was able to sell a property I bought for $168,000, put maybe $20,000 to $30,000 to renovate for almost $370,000. Very, very amazing transition. And I freed up my entire VA loan to buy another huge property, a multi-million dollar or $1 million, $1 million+ 3-unit in San Diego. Sold that property, got out of the Army, moved back to San Diego, started a job with the county of San Diego, making my first time over $100,000. Still not, I'm not talking, several hundred, I'm talking low ones, which I'm fortunate, in the grand scheme of things, that's a ton of money. A lot of people would do whatever they can for that much money. But in the grand scheme of things, it also, for what I was looking to do, it wasn't the most amount of money. So I sold that property, stabilized my assets, got out of the Army, moved back to San Diego, started the new job, did my third house hack, the 3-unit, $1 million+ 3-unit San Diego, which actually, so because I sold the first property, I went backwards. I lost $1,000 of cash flow because I sold that one, but I did get a bunch of money to then do stuff with, investing primarily in stocks, paying off debts, things like that. And then even when I house hacked that 3-unit San Diego, if you know anything about markets, a market that appreciates or increases in value tremendously does not tend to cash flow a lot. Fairbanks, Alaska was the opposite. It cash flowed a lot, but would not appreciate a lot of value. San Diego appreciates a lot of value, but you don't necessarily get a lot of cash flow. The multi-unit helped me out get more cash flow than I would otherwise. And because it was 100% financed through my VA loan, I basically broke even. Every month I was making just as much money as the property, as my expenses were. However, I had a lot of the other benefits of real estate investing, which made a lot of sense for me at that time. At that same time, I also stopped wholesaling. It was not something that I was no longer interested in. It is a lot of unnecessary work. And I'm a buyer of real estate. That's what I am. I'm a buyer, an owner of real estate. I raise capital. Wholesaling was great. Made me some good money along that journey. Sometimes I'll wholesale a deal or two, but I'm no longer want a massive wholesale operation like we had at that point. And I got looped into the sub-2 community, the sub-2 network. I was sitting there one day watching YouTube. I got hit with an ad for a video, and I clicked the video of Pace Morby talking about something called the Morby method. Halfway through the video, I signed up for sub-2. I called them and said, hey, or I called the line and someone reached out to me and I said, hey, I don't need to be sold. I'm paying whatever the entry is. I'm joining this community, because in that video, Pace Morby was describing the Morby method. He was literally step-by-step explaining the correct way to do what I did for the 20 rental cabins. And I thought, dang, I made so many mistakes. This guy knows exactly how to do this creative financing thing the right way. I am going to learn from this guy. And little did I know, just creative finance and real estate investing was like the least of the things that I would learn in that community. The community was the reason why I was able to now start buying out of state. It's the reason why I am so much more confident as a capital raiser, why I specialize and am an expert in creative finance. And that was a lot of the end of 2022 and the start of 2023. Just took some time to focus on my portfolio, learn a bunch, connect with maybe 100 other investors all over the country. I felt confident that I can now invest in other markets, not because I knew I could fly there whenever I needed to or whatever, because I knew I had a community full of people that all wanted each other to win. And If I had something happening in a property in Atlanta, I knew that there was 10 other investors in that market that I could pay, or we could exchange value, or they would just willingly go and check it out and help me out. That was a massive peace of mind. So that community was a huge piece of why I was comfortable now to go out and buy properties out of state, or at least be comfortable with that concept instead of only up to that point buying in my local market. So I didn't really do much. Well, I didn't really do much to further propel my financial independence goals outside of selling that property, getting that money. I did exchange my property, my 2-unit that was making $1,000 a month, for a much more expensive 3-unit in San Diego, which would help with wealth, but it didn't benefit me in cash flow. It was a net $1,000 a month in cash flow, as opposed to keep my 2-unit. So that wasn't that. But what I did do was open my eyes to saying, okay, now that I'm financially free, I'm no longer wholesaling. Doesn't mean anything. I don't want to do it. Got into sub 2, made a bunch of connections, started adding a lot of value to others, because although I was newer in sub 2, I was already a real estate investor. I already raised some capital. I was already familiar with some creative financing, started adding value to other people as much as I could and connecting with others. 2023 is when everything really took off. In 2023, as I mentioned, I'm a hard worker. I'm studious, all that good stuff. So I took the creative finance curriculum, the creative finance trainings. There's a vault of like thousands of Zooms. There's live weekly calls. I literally treated that as a second job. I would work my job all day, and in the mornings, 4 a.m. to 7:30 a.m. before my W-2 job started, and even after work, I was learning and connecting with people and executing. I became an expert in creative financing. At least I will say that. And I mean, you'll see that based on my trajectory. It was kind of hard to say until I started buying creative finance deals systematically. I met my business partner, Adam Catledge, at that point. We met in 2020, actually, in an in-person event. We realized, dang, we're both military. We both have strong work ethic. Every morning in early sub 2 calls that was designed for the East Coast, we'd be in there. We'd both be at the gym, working out, adding value there, connecting with people. And we just kept seeing each other doing our thing. We met up in an in-person event. Actually, him and my wife started talking, and she said, you got to meet my husband. You guys would love each other. He was from North Carolina. He already owned a property, all that good stuff. So she made that connection, and we just hit it off. And we said, you know what? This is cool. Great to meet you. Let's meet up again. We met up again, and we said, you know what? I think we're ready to date. I don't really want to officially partner, but I do want to date. I want to connect with you, partner with you, and let's see if there's something we could do here. Within 1 month, we put up our first property under contract, and we were starting the process of raising capital. We said, you know what? This is a phenomenal start. We are both visionaries. We have a business full of dual visionaries, which is not common. Usually you have a visionary and an integrator. I do have integrator tendencies, right? The spreadsheets, the engineering, the systems, that kind of stuff. But I really am a visionary at the core, and so is Adam. They don't really recommend you do that. But the luxury of our business is we are constantly pushing each other in the scope of visionary. Adam would be open to investing out of state. I would say, let's look at these larger properties. He'd say, let's use private money partners. I say, let's use private money lenders. We keep pushing each other to higher levels and overcoming larger obstacles together. We both have the same mindset. We are financially free, separate from our buy and hold portfolio. We're going to build a massive portfolio, reinvest all the money back into the business to free up as much of our time, get employees, get people in there so that we can scale and just focus on the parts of our business that we enjoy the most. But starting out, we had to do everything. In the first 9 months of partnering, we bought 15 buy and hold properties together. We did all of that leveraging creative financing and other people's money. We didn't use a single dollar of our own to buy any of those investments, 15 rental units in 2023 alone. We said, dang, we did this proof of concept. This is amazing. We're going to keep going all in. Coast to Coast Vets was here to stay. But at that point, we said, but we're also extremely exhausted. We are finding all our deals, analyzing all our deals, raising all our capital, creating all the marketing material, doing all the due diligence, doing a lot of the contracts, all this stuff. And in December of 2023, I said, we're going to continue doing this, but let's do this a little differently. Let's start investing in building a team so that we can focus on the best parts of our business. What you and I are the only ones who can, what only you and I can do, which was raising money and really getting great deals coming our way and analyzing and determining what would we buy together. So at that point, we hired our first bookkeeper. We hired a fractional CFO to help us with financial management. We We got our first asset manager or operations manager who helped us with the due diligence and managing our properties. We started paying for transaction coordination instead of doing the work ourselves. We got more systematic about our systems of deals coming in and capital being raised, and we continued growing that throughout 2024. Although we took several months of not buying at the same rate that we were originally, it was tremendous because now we were doing the best parts of the job, and it was much more enjoyable to scale because we were just focusing on the most important parts of our business. Year to date, we've added 11 more rentals. Most of them are, we have plenty at 0% seller financing. We have one at 2.375% sub 2 loan, 3%, 5%, all over the spectrum, 5% and lower. We've bought an incredible, I could do a whole presentation on the amazing deals that we've bought. And if you're in my, some of the communities I'm part of, you'll see some of the amazing deals that I bought. I got really great at raising capital this year, and near the end of last year, raised millions of dollars to deploy in our investments and to help other people when they're trying to buy investments. I created my creative finance calculator, the ultimate creative finance calculator, which is literally like back and forth, number one and number two on the internet with one of my mentors. I won't say his name, but our calculators are literally constantly battling each other out for who's top spot for creative finance calculator. I also started lending money to other investors, which has further fueled my ability to raise, or not my ability to raise, but has further fueled the financial freedom because I'm getting much higher returns. I have much more control of those investments. And it all started with mastering deal analysis. The most fundamental thing, if you're a buyer, you're a lender, even if you're a capital raiser, a connector, ideally an intentional connector, someone who's adding a lot of value, it's got to be mastering deal analysis. Does the deal make sense for a fix and flip? Does it make sense for a buy and hold? Is that the best acquisition strategy? Is that the best management strategy for that property? Is that like the highest and best use? And especially as a lender, now you have to then also vet, is the borrower capable of doing the thing they're going to say? I don't want to be someone's practice environment. I don't want them to utilize my money on their very first investment doing something they may not know how to do. There's other people who are willing to do that, and typically you'll get paid a higher interest rate return. I don't want to do that. I'm Warren Buffett-esque. I don't like to lose a single penny. I'd rather get slightly lower returns with way less risk than try to maximize my returns at higher risk. That's just not the way I like to do it. And what I really I've been doing this a lot this year is helping others. I not only help people in the sub 2 community, in Owners Club. I am an educator in Rob Abasola's Creative Camp. I was a speaker talking about creative financing and capital raising at Soli or Lattes and Leases Invested event. I go into a variety of communities. I'm part of Amy Majuri's Raising Private Money. I've helped create underwriting curriculum and training and all that for other investors and other people who are educating. I started my YouTube, really started focusing more on Instagram. I created my school community, my free school community called Wealth Through Real Estate, full of hundreds of buyers, lenders, capital raisers, connectors, wholesalers, people who want to actually build wealth through real estate towards true financial freedom, doing all that for free, having a lot of training videos, weekly Q&As for them, doing that. And in 2025, I'm going to keep doing my thing. I am way past level 3 financial freedom now. I'm working on that level 4 because there's no real definitive amount to that. Just keep doing my thing until it no longer serves me. Starting with this year, and I officially quit my job this year, just 1 month ago. It just made no sense anymore. I love the work that I do. It made no more sense when they asked me to come back into office more frequently. I said, all right, then I'm out and just continue doing the thing that I'm doing with real estate investing. And that's the luxury of being financially free, having what we call FU money. So if things aren't going your way, you're never forced to do something just because of money. And that's a big part of this year and moving forward. So more travel, more adventure, more buying real estate, but at a lower scale. I don't need to buy 15 a year, 12 a year, whatever. We had goals of buying 3 to 5 a month. The more we thought about it, the less we wanted to do that. We already have a massive portfolio of $20 million. I already have a ton of cash flow. I don't need to over leverage, over risk myself to be able to scale at that point anymore. And it's just a lot of work. And if I wanted to really add 3 to 5 a month, I would need a larger team. We'd be more due diligence. We'd constantly be working to get more deals, raise more money. What I thought instead, my business partner and I talked, the best thing we can do is help others do the same thing. Instead of buying every deal, maybe we can help get other buyers those deals. Maybe instead of using all the money that we're raising, we can help connect that money to other investors who need that money. A lot of that's in the wealth through real estate community. I'm going to be, sharing a lot more of that. So please join that if that's something you're interested in. If you're a buyer, lender, capital raiser, connector, you want to be one of those things. You need access to capital. You need access to deals. You want to become a master deal analyzer, whatever. You need better systems, processes. Join the Wealth of Real Estate free community. There's literally no harm in that alone. This training and recording and plus some additional resources will be there as well. So 2025, keep doing that. Keep buying, but at a lower scale. Keep raising capital, but I don't need to use all that money. Continue lending all my money, especially as I continue converting more and more of my stocks into my self-directed IRA and then lending that out, and just continue helping other people achieve financial freedom. A big goal of mine is just helping intentional investors achieve financial freedom. It's really not for everyone. As you saw, I had to work. If I wanted to be as passive as possible, I would have done that through stock market investing. I wanted to work harder to reduce my timeline to financial freedom and do it at a much larger scale. And that's exactly what I did. And that's what I try to help other people do as well. That is the journey, my entire financial freedom journey, where I'm at now and what's next for me. There's a couple of questions we will answer those in the Q&A section that's coming up shortly. I got another little slide for you just to kind of visualize what's going on here. So here's my net worth. And this actually doesn't even show. And when I started tracking in 2017, net worth was negative. I had negative $13,000 to, well, I'm not telling you the exact dollar amount, very high. And this doesn't include any of the coast to coast vets investments. This includes my lending, my stocks, my cash, my own real estate portfolio. I don't even account for the net worth benefits of coast to coast vets. That's all done through our CFO and bookkeeper. I completely separate that for myself. But to really visualize my timeline from cash flow, 2020, added my first 2 units. Now I was generating $1,000 a month of cash flow. 2021, added those 24 units and added $5,500 a month of cash flow. 2022, I lost $1,000 a month because I sold that first duplex and I did not get more money, or I was neutral on the 3 unit that I bought in San Diego because the upside for it long-term. 2023, started converting that 3 unit into furnished midterm rentals. And now I was generating $2,000+ a month on that one investment. Plus I was making more and more money from coast to coast vets and the 15 units we bought at that time. What you'll notice is when I was doing it independently, I was keeping more cash flow. So I bought 15 units to make $6,000, 2 of that coming from my one property I already own. Yes. So if I'm partnering with people, I am raising money from other people. They got to get paid that. So my business partner and I, we split everything 50-50 that we buy. If I'm raising money from a private money lender, I am paying them 12% interest rate return on their money. So a lot of that cash flow is getting paid to them. I'm buying properties to generate wealth. I'm still generating cash flow, but I'm generating less than I would have otherwise. If it's $1,000 and we have a private money partner where we're splitting ownership, let's just say $1,000 of cash flow a month. Myself, my business partner, and the lender, the partner, are each getting a third of that. So instead of making the $500 or $1,000 I would have made using my own money, I'm making a third of that. But it's way more fun. It's way more enjoyable. It's way more scalable. I cannot do that if I was using my own money. I could not have had accumulated $3 million to buy the last, 25 plus rentals. I needed the $3 million from other lenders and investors to be able to buy that portfolio. I'm exchanging some cash flow in the meanwhile to scale that portfolio for the massive wealth generation benefits and the cash flow that is associated with it. 2024, we've added another 11 units up to this point, generating over $4,500 of additional cash flow. So from my real estate portfolio alone, we've got approximately it's a little volatile. It's not always the same. Sometimes you're reinvesting, fixing things. Sometimes it's higher, whatever, seasonality, but around $16,000 a month of passive cash flow from all of my real estate between coast to coast vets and my personal portfolio at 53 units. Just wanted to show you the timeline because literally no one does this. I don't know why. They're afraid to show you their real journey. I think the problem is there's a lot of gurus who sell education, who sell content, who do whatever. And they do that as a means to achieve financial freedom. They're not achieving financial freedom through real estate and then showing people how to do that, which is extremely valuable. You want to learn from someone who is successfully done the thing to achieve the end result you want, not someone who is utilizing education as a way to make money to then be financially free and then pretending like it was because of real estate because they bought 1, 2, 3 houses. You want to learn from someone who's actually done the thing successfully to a point that you want to do it at. And then if education comes, cool, that's an additional value. All right, let's keep it going. So just to show you what the chart looked like. And because I had stocks, I was buying properties, I was selling properties, paying off debts, whatever, you see a little bit of volatility. If you really zoomed out, it'd be somewhat of a straight line. And especially now, the trajectory is going to be it's just going to continue growing. I can't say exponentially, but it'll continue growing at a very solid rate. There's no reason why it shouldn't. Between my skills, my knowledge, the ability to raise capital, ability to analyze deals, all that good stuff, it just continues compounding. That's why it'd be a disservice to stop now. So just wanted to say, as I mentioned, that one story of the 29-year-old who has $360K through real estate, he says through stock market investing, says one of his biggest regrets is he does not feel like he's lived his life. He saved a ton of money to be able to invest in the stock market, to be where he's at, still 13 plus years away from financial freedom or FIRE or financial independence in the stock market investing world. I haven't. I've done everything that I've wanted to. I just take advantage of every opportunity. I look at things very optimistically. A lot of people get stationed in Fairbanks, Alaska, and they just think very negatively. They think, hey, what am I doing here? There's not a lot of people. There's not this. I always think of things positively. I thought of it as a 3-year vacation. I went, and I made best friends with my friend, Bryson, who was a lead tour guide and lead adventure guide. And he also helped me with a lot of my renovations. Here's a photo of me ice climbing or climbing a waterfall. My wife and I in front of our first duplex that we bought. There's little Coda, my dog. I have my beautiful wife. A lot of adventures. Here's us in Barcelona as just recently graduated, poor college kids. Our beautiful wedding right here. My beautiful baby girl, Mila, which I had weeks before I turned 30 and officially quit my job shortly after that. It just made no more sense to waste my time for money when I just could be spending time with my baby girl and my family. Fishing a ton in Alaska, caught hundreds of salmon, or 100 plus salmon, not hundreds, 100 plus salmon, several halibut, rockfish. It was awesome. At the military ball with my wife. This is us. I want to say this is Costa Rica, which was an amazing experience with some friends. This was our drive back from Alaska. We moved out, going back to San Diego. We decided to do basically a 1-month road trip from Alaska to like 3 to 4 week. A road trip from Alaska to California, drove through tons of Canada. This was Laird Hot Springs, which was one of the best places ever, extremely remote. It was an awesome time. Is us adventuring in the Arctic Circle. So not only did I take advantage of the amazing opportunities that were available in Alaska, but just traveling the world, which is a huge part of what I like to do. Continue doing that. A lot of adventure. You don't see the photos of me snow machining, rock climbing, ATVing, boating, all the fishing that we did. I don't know, everything, snowboarding, all this fun adventures. I just, what I love to do is spend time in nature, spend time with my family, adventure, travel, spend time with my friends. We would do sick bonfires in the minus 30-degree weather. We'd go out and bonfire in the middle of the night, watch the aurora with a beautiful fire and just hang out, talk, all that good stuff. That's really what the purpose of life is for me. I don't need massive luxuries. I don't need a Rolls Royce. I don't need insane mansions or whatever. I just want to be able to do what I want, when I want, with the people that I want to do it with, wherever I want to do it with. That's what I want. I just want freedom. My financial freedom is for time freedom and the ability to do what I want. That's all I ask for. And that's how I've shaped my life. I've designed the life that I want now, and it's incredible. So I'm going to talk personal finance quickly because I'm giving you all a free budgeting tool, net worth tracker, financial freedom projection tracker, all that good stuff. You're going to get that. And the 3 key metrics for tracking your personal finances, especially early on, is your savings rate, right? If you want to be financially free, you need to understand how much are you spending on needs, how much are you spending on wants, what are your financial freedom levels 1 through 4? And that is very easily, yeah, exactly. A small mansion will do. That is the thing. You need to understand how much are you spending, so then you know what number you need to achieve to actually be financially free. Understand your savings rate, which is just what are you saving, right? What are you not spending of your income? What is that as a percentage? My wife and I at the highest end, because we're living rent free in our 2-unit, like the mortgage was being paid by the tenant. We were saving 80+% of our income at one point. That's why I made the trajectory so much faster. And then real estate made it like way more faster, right? I mean, you saw, went from like, oh, cool, I'll be able to retire at 50, 45. Oh, shoot, I'm retired at 26, technically. I'm financially free. You're going to be able to track your net worth, which is a great thing to understand. Is your net worth increasing, right? That does not the best indicator of financial freedom, because that's more focused on cash flow, which you get to track in there as well. What is your current cash flow? Are you working towards your financial freedom number? Are you close to it? How far away are you to it? So you're going to have that budget, net worth, and financial freedom projection tracker. All that will be in the school community for you all. So I will show you exactly how to access it. Here's just a quick snapshot of it. Go on my Instagram if you want to see what it looks like. I just posted that a little bit. Simple calculations for, your savings rate. If you have $10,000 of income, you're spending $8,000 or you have $2,000 left over, right? That's what you're saving. You have a 20% savings rate. If you are, right, your savings is just your income minus your spending. You cannot save unless your income exceeds your spending. You need to understand that, right? And then financial freedom is when your passive income exceeds your expenses each month. We'll just skip past this. Just good stuff, giving you a little insight into the tracker. Your net worth is just your assets minus your liabilities. If your assets are between your cash, your investments, your home value, rental property value, that all equals $420,000. Your liabilities, your debts, right? Credit card debts, personal mortgage loans are $300,000. Your net worth is the difference. Your $420,000 of assets minus your $300,000 of liabilities, you have a net worth of $120,000. Ideally, that number is increasing over time, especially when you take a zoom out. Maybe some months it goes up and down like you saw in mine. It went up and down. Sometimes the stock market crashes like it did in 2020, 2022. So it dips a bit and then it continues going up. If you're doing real estate prices do drop, but it's a lot more stable than, especially because we eliminated a lot of the systemic issues that were there with the great financial recession. Well, you all know, we've eliminated a lot of the issues that were there, a lot of the terrible loan products that had people over leveraged, which allowed properties to drop massively in value. Part of the reason why it did not drop massively in value here, the only places it dropped massively in value was, let's say Boise, Idaho, or Austin, Texas, where it increased, went from 100,000 to 500,000. And then maybe it went down, like it dropped massively, right? Let's say 20% down to 400,000. Yeah, it dropped from 500 to 400. But if you were earlier and you bought it early and you hold long enough, it went from 100 to 400, right? So if you take a step back, realistically, that trend is going up, and that's exactly what you want. You want your trend to be going up, increase your cash flow over time, and increase your net worth over time. All right. So how can I help you all? This is a big part of it. I have a free school community called Wealth Through Real Estate. On the next slide, you're gonna be able to scan a QR code. You can get directly linked into that. I believe it's actually going to my link tree, and it's one of those. It says, want to learn how to generate wealth through real estate, free school community. Click that link, sign up. You're more than welcome to join. Tons of recordings. You get live access to Q&As, deal analysis. You bring your deals in. I'll help you underwrite them, help you analyze. If you're a buyer, lender, whatever you're doing, I'll help you with those investments during those scheduled calls. I'm here to help you guys achieve financial freedom. That is absolutely free. Nothing in there for sale. It's all for free. What I have recently started is something I am piloting called the Veteran Investor. We've already started the cohort this go around. So it's not open. Sorry, if this is something that sounds great to you, it's not open. I might do it again in January 2025. I don't know. I will eventually put a wait list together in the free school community if you're interested in that. But it is a 6-week intensive boot camp, primarily geared towards real estate investors who already own some assets that are now looking to scale their portfolio. This is not the right fit. If you're working on your first investment, this is not the right fit for you, right? There's plenty of free content, the free school community, a lot of content out there for you to get your first deal. If you are someone who has a few properties and you're looking to scale massively through mastering deal analysis and negotiations, generating consistent leads for you to be able to buy, maybe negotiate and then buy. You want to be an expert in creative finance and various acquisition and management strategies, and you want to master your business and systematically raise capital, have all the operations and systems you need to make your business overall more scalable and free up your time, this is who that's for. As I mentioned, I may not be doing this again. I'm starting with a cohort of 2 groups right now. It's working out very well. We recently started. I might do it again in January 2025. I will let you know if I do. In the meanwhile, I am creating the Intentional Investor. It is another school community. This one is paid. This may not be the right fit for you. Maybe you still need to focus on the free stuff. But the idea for the Intentional Investor community is you get everything in the intensive boot camp, the Veteran Investor, but instead of me hand-holding and doing it like custom with you, like, during the live sessions, you're getting all of the same education, but it's more DIY with weekly support from me, right? So you get all the recordings, you get all the tools that they are getting, and you get the ability to still scale your portfolio. Just, you're going to have to do a little bit more, as opposed to me helping you create your marketing material or set up your CRM to raise capital. You're going to have the trainings and recordings of how you can do that for yourself. You get all access to all the Veteran Investor recordings and tools. Every training that you have to unlock in wealth through real estate the only thing you have to do to unlock trainings in wealth through real estate is to connect with people. As I mentioned, community is what helped me scale massively, partnering with people, connecting with people. So to unlock some of the trainings in the free school community, you have to connect with people. You have to post, like, comment, just engage with each other. That's it. That's all you have to do to unlock all the trainings. If you want to expedite that, and joining the Intentional Investor gets you all of those trainings immediately unlocked. Plus, you get half off all of the tools and resources like that I have, including consultations if you need me to help you analyze deals, separate from what I'm offering already for free weekly. Intentional Investor is going to get twice as many free weekly live sessions. But if you need it, you have a deal that you really want to underwrite right away, you want a one-on-one, something like that, then you're going to get a discount on that. My Creative Finance Calculator, you get a discount on that. If you are waiting to buy my Ultimate Creative Finance Calculator, just wait until Intentional Investor opens up. For the same cost, you can buy the calculator now. With that 50% discount code, you can pay for a whole month of Intentional Investor and get the calculator for that whole month at the same price. So just wait until it opens up October 1st if you are ready to make the leap for the Ultimate Creative Finance Calculator. If you want to be right, and I have free calculators too, but if you want to not just underwrite long-term rentals, but you want to underwrite rent by the room, midterm rentals, short-term rentals. If you want the calculator to tell you various offer scenarios that would work for the desired cash flow and cash on cash return that you're looking for. If you want to understand what the investment looks like over a 30-year period, not just the year one. If you want to leverage private money partners or private money lenders, or you are a lender or partner and you want to see if the deal is viable for you to lend or partner on, all of that is in there in the Ultimate Creative Finance Calculator. You pay one time, and every single update I make forever and always, you continue getting access to all the time. You just download a fresh copy every single time you need a new one, and every update that I make is on there forever. That's what that gets you. And the Intentional Investor, there is a link in my link tree, which you're going to scan using the QR code next, or in my Instagram bio, where you can join the waitlist for the Intentional Investor. The official start date is October 1st, and you're going to get access to, you're going to get access to a ton of stuff. You get access to a 7-part traditional finance real estate investing course that I created with a partner of mine, Brittany. This is helping you get your first real estate investment deal, right? Maybe Veteran Investor doesn't make sense for you because that's not the place for your first deal, but Intentional Investor will help you systematically go from A to Z on your first investment. You get a 6-part series that I did as a underwriting like masterclass for another community. You get access to that. All my information about raising capital, all that stuff is in there. So with that being said, I will leave you with this. Scan this QR code. You can see the links in there. You can join the free Wealth of Real Estate community. If you're interested in the waitlist for Intentional Investor, please just let me know so I can lock you in at a lower rate, because once we open up Intentional Investor and we get a certain number of members, I'm going to start increasing the price. The reason for that is I don't want it to grow massively so. And if I leave the price at $199, we're going to have too many members for me to feel like I'm providing the ultimate value to each person that is paying. I don't want anyone to ever pay me a single dollar if they're not getting more in value back from me than they are paying. Considering the intentional or the Veteran Investor is, let's just say, tens of thousands of dollars, you are already getting massive value by getting access to that. You're getting access to the $10,000 underwriting course, the 6-part underwriting course, the $1,000 buying your first real estate investment course, half off the calculator. You're getting a ton of value, but I want there to be only so many members that I can personally help you with your financial freedom journey. If I can't do that, then I don't want to add more members for the sake of it. I don't need a huge Instagram following. I don't need 1 million YouTube subscribers. I don't need thousands of members in my communities. I don't need that. I don't even want that. What I want is to actually help people achieve financial freedom, especially intentional investors, achieve financial freedom. I want to help you do that. And I don't need to do that with 1 million people. I would rather help 100 people do it for real rather than just put a bunch of fake viral posts out there on social media just to get followers. That's not the kind of person that I am. If you are working with me, I want to help you achieve something, accomplish something. So questions. I saw plenty of questions. I need you all to repost your questions if you want me to pull you up and we can go through all the questions that you have. Here's a QR code. Please scan that before I go back to the other slide. So please scan that and add your questions so I can go through them. So now we have 375 members in the free Wealth of Real Estate community. You all can join at any point. And if you don't want to, you don't think it's the right fit for you, you don't think you're gonna get value from it, don't join. Like I said, I don't need people in there or want people in there who are not gonna take action, who are not willing to work, who are not willing to actually achieve financial freedom. Like I said early on in 2020, I told myself, I can be in all the Zooms I want, I can read all the books I want, I could underwrite as many deals as I want, unless I am putting in the work to underwrite those deals, make the offers, and close on properties, I will never own real estate. If you're not willing to understand that and do the work for it, you're just wasting your time. Go watch TV, go do whatever you want. I'm not going to convince you to join if it's not of value to you. It's up to you to join if you think it's valuable for you. All right. So with all that being said, when you join, I'm just going to kind of walk you through it. What you're going to see is kind of this about page. When you join, you're going to click join, yada, yada, whatever. Community is where the board is for people to post whatever they have. Oh, look, awesome, awesome. So people are posting, commenting. We're all engaging with each other. Good stuff. The leaderboard shows you who is actually engaging the most in the last 30 days. Every single month, I also give prizes away every single month to the free community. People are paying nothing. They're learning, getting value, free Zooms, tools. I'm still giving more value, giving prizes to winners. First place gets 3 months of the paid intentional investor community. Second place gets paid access to the paid ultimate creative finance calculator. Third place gets a 30-minute one-on-one consultation with me. I did 2. I did 1 yesterday and 1 today. And then fourth, I work with PropStream and I get you free trials and gift baskets and things like that if you're in 4th place. Every single month, people are getting these prices. All you have to do is connect with each other. I don't ask you to give me money. I don't ask you to send me your deals. I just say connect with each other and I will give you prizes for connecting with each other. I wish I had this 5 years ago. I kind of have this in sub 2, but I'm trying to create something ultimate value to the people that want to be part of it. All right. So this is where you post stuff, all that good stuff. A lot of value is going to be in this classroom. Actually, let me run you through kind of the leaderboards. So the way school is set up, at least the way I have it set up, is you level up by engaging with each other, right? The same way you win prizes, the same way that you level up. For each level that you go up, you unlock more and more trainings. All I'm asking you to do is connect with each other and you'll get more and more trainings for free. You get the whole traditional real estate investing underwriting series and a masterclass in real estate investing. Level 3, you'll get the creative real estate investing, all the deal analysis, several deal analysis in there. I'm adding more and more all the time. Advanced underwriter, advanced investor level. I want you all to be there live if possible on our live weekly calls and asking questions and asking me to help you analyze your deals. If you're not able to make it, I do record them and I do post them, but you have to unlock it at a higher level because I do want you all to be there in person. If you're in the paid intentional investor community, all this and then way more is unlocked in the paid intentional investor community. So you go to the classroom for everyone who's here. If you want the free budget, net worth, and financial freedom tracker, you're automatically going to get access to these 2. The start here, just a simple intro. This is what you got to do. Download the app to make it easier. Here's the calendar and the live Zooms. Go post an intro so people know who you are, what you're doing, what you want to do, what value you can provide them, what they can provide you, all that good stuff. I literally, I don't need you to do anything for me. Do it to engage with each other. And then if you want the trackers, the budget, net worth, and financial freedom tracker, it's going to be right here. So the actual tracker is going to be automatically unlocked. You just click this button. That's literally all you do. It's absolutely free. And so if you want this, do it now. If you're watching the recording, go do it right away. All you can do is click that, and then all you do, make a copy. Make a copy. All right, cool. Let's stop sharing this. And I want to help you all with whatever questions you have about anything. Oh, actually, I do need to share one more thing with you. I need to share where you're going to access the recording, right? So once again, we are in the school classroom, right? So you go to the Financial Freedom Masterclass. You have the calculator here, download a copy. And if you wait until 9/27, I'm still going to make it free. You're just going to have to unlock it later. I'm giving it to you for free now, just for being part of this and doing it right away. So everyone in the school community and Wealth to Real Estate, everyone who's watching live or the recording, go grab your copy. And then you're going to get access to the recording as well as soon as it's done, edited, and uploaded. I'll give you a quick preview of some of the other things, right? When you unlock the traditional real estate investing, deal analysis intro, key terminology. I have my free calculator literally everywhere for you all. If you want to partner or lend with me, here's the form to do so. If you want to connect on Instagram, YouTube, there you go. It's all there. Analyzing deals from start to finish, deal analyzer calculator, utilizing the ultimate creative finance or ultimate conventional finance calculator. Just a couple different examples here, right? I believe that's a level 2 unlock. Level 3, creative real estate investing. Real estate investing masterclass. And a lot of this goes into creative financing. Seller financing deal analysis, subject to deal analysis, hybrid creative finance deal analysis, another subject to deal analysis. And I have a ton more videos that I will continue adding here, plus all the live underwriting and Q&As. We're going to get rid of a few of these and we're going to clean it up, but you're going to get the live underwriting Q&As, live underwriting Q&A recordings in here, but you have to unlock that as well. If you are wanting to be part of the live calls, here you go. You just click on it, add it to your calendar, and you just join with us. Right now it's 12 p.m. Pacific Standard Time every Wednesday. Cool. Questions, y'all. Let's see. Oh, yeah, there are questions. Let's do it. I'm so excited to answer some questions. All right, let's get this going. Let me leave the, wow, my hair, huh? All right, we're going to present one last time. So if you haven't yet, go for it now. Here's the QR code if you want to scan that. Like I said, no worries if you don't. If you're not the right fit to for the free Wealth to Real Estate community or anything else, don't worry about it. No need to do it. And then so you just go for it, scan that, and then soon enough I will show intentional investor and veteran investor again. So let's see, questions. What's SWR? So safe withdrawal rate. The rule of thumb roughly for the financial independence to our early community is you can pull out 4% of the total amount you have invested that first year, and then you can continue pulling out that same amount and just adjust for inflation every year moving forward. And you have like a 95+% likelihood of success if you have a 30-year time horizon for your financial independence. Like you're going to retire for 30 years and live off that money. Look up financial independence, retire early, and type in Reddit, and you'll get all the information you want about passively investing in index funds to achieve financial freedom and the safe withdrawal rate and all that good stuff. All right. So thank you. Thailand blows my mind. Appreciate you. Let's see. Questions. Man, a lot of positive comments. Yep. Learn. Yeah, definitely learn from free materials. But it's, without me paying for my first seller finance mentorship, without me paying to learn how to wholesale, without me paying for conferences and books and VIP rooms at real estate events, without me paying for sub 2 owners club, without me paying for these things, I also would not have been able to scale the way that I did. At a certain point, there's only so much you can do from a book and from free materials, you might need the additional guidance, support, systems, blueprint, connections, whatever that comes with paying for that. If you think that's a right fit for you, pay for it. If you don't pay for it. It might take you a little longer, but as long as, you enjoy your journey, either way, just keep working towards whatever you want. Please name the real estate community. Yes. Wealth through real estate, school community. So here we go. Well, I don't need to show you. It's there. All right. Have this recording. Yes. This recording will be in the school community for you. All you got to do is go in and grab it. Ooh, lots of people joining school. Awesome. Awesome. I'll refresh and check that out later. Small mansion. Yes, ma'am. Let's see. Yes, you guys get a recording. Don't worry. Okay. Intentional investor community. Yep. I will show you that. So it's similar to the wealth of real estate community, but a lot better, right? I'm just being transparent because the veteran investor, the 6-week boot camp that I'm doing to help real estate investors scale their portfolio through mastering deal analysis and negotiations, through generating consistent leads for their buy and hold business, through creative finance expertise, deal analysis and negotiation expertise, multiple different management strategy, underwriting, mastering this, like the ability to raise capital, create all your marketing material, utilize a CRM, do all that to scale your business. All of that, you're getting access to an intentional investor community. Instead of paying the large amount that they are paying, you are paying $199 a month if you join before 10/1. If you join after 10/1 and we've hit a certain member limit, it will be higher. And that is primarily to throttle the growth of the group. As I mentioned, I don't want hundreds of people in there. I want a group that I feel like I can actually add value to. And that's really what it is. So we're going to throttle the amount of people in there. In addition to all the tools and recordings for the veteran investor community, you will unlock access to the entire wealth through real estate community recordings. Every single recording wealth through real estate, you won't have to go through the leaderboards and network your way to unlock it. If you just say, hey, I know my time is worth a lot more than that. And I just want, I love connecting with people, but I just want to unlock this training and rock and roll. I'm ready for that. You'll unlock all that stuff. You'll get access to an entire series to go from zero investments to your first real estate investment property, primarily through traditional financing, but creative finance is there too. You will unlock multiple different series on mastering deal analysis and underwriting, on all the different acquisition strategies, all the different management strategies. You'll get 50% off all of the tools I have available and resources. And if you were waiting for a moment to buy the ultimate creative finance calculator, which is $400, wait until after you join Intentional Investor. I will give you a discount code that will make it 50% off. So for the same cost of the calculator today, right? No incentive for me to tell you this, but for the same cost that you would pay today for the creative finance calculator, you can get a whole month of Intentional Investor and the calculator for life for that same price. What else is there? You're going to get access to more live weekly recordings. All that will be live weekly Q&A and deal analysis. You'll get, I will provide more and more, you'll unlock all the recordings right away. You'll get all that good stuff. It's really for someone who is you'll learn how I'm lending my money. You'll learn how I'm raising capital, the systems and tools that I use. You can unlock you will unlock at a certain level how to get my CRM for absolutely free. The CRM that I'm using that people pay for, you will get that absolutely for free if you unlock it in Intentional Investor, the same one the veteran investor community is using, or the veteran investor like boot camp people are using. Hopefully that explains it. It's just my paid school community, which is just a higher level of wealth through real estate. You can learn a lot in wealth through real estate, but if you want to take it to the next level and be more efficient and have more of a blueprint, not just like understand all these concepts, but have more of a blueprint for achieving financial freedom the way that I did, that is what Intentional Investor is for. If you're looking to scale your buy and hold business, if you're looking to raise capital and be very systematic about it and understand how am I raising money from private money lenders? What am I offering to private money lenders? What am I offering to private money partners? I will bring guests in there. I'm very well connected because I add so much value to other people in their communities. I can bring guests in here and help. If there's certain areas that we need to focus on, I'll bring people in there to help educate you all. And that's you get all that for $199 a month, or at least if you do it before. Darren said, hit the return button before I finish the comment. Personally, I pay for courses all the time and it's the best ROI. I 100% agree with you. I'm not here to sell anything. Like I said, if it's not the right thing for you, I don't care. Don't do it, please. I have a free community that adds a ton of value. But if it if you know that you will get a high return on investment, like I knew when I've paid for all the things that I've joined, I don't spend money on education willy-nilly. I know plenty of people who just buy everything, be part of everything. Don't do that. Focus on the thing you want to do. If you want to be a buy and hold investor, you want to scale your buy and hold business, you want to raise capital, you want to be better at lending, you want to intentionally connect and profit from that, you want to have more access to deals, you want to have more, you're a wholesaler who wants to access more buyers and lenders and all that, then it's the right community for you, right? If you want to wholesale, fix and flip, whatever, there's other communities that will offer you way more value. This is not the one for you. Do something different that makes the most sense for you. If you see the ROI in that, awesome. That's all I can do to try to convince you, I guess. James said, you mentioned raising money that you haven't deployed yet. What mechanism are you using for that, as we are taught that you lend to a transaction through deal title company? Yes. So James, what I'm talking about is soft commitments to capital. People have expressed, hey, Michael, I have X amount of money, right? They are in my CRM. They've submitted my form, right? It's systematically submitted my form. We've scheduled a call. We've talked to each other. They said, hey, I have $250,000 to lend, and I want to lend it right away. And I'm open to the terms that you are offering, right? I want to be your 12% private money lender. I want to be a private money partner and own these assets with you. I want to invest with you. Maybe I don't have enough deals to use their money at the time. So I've raised way more than I've actually used, right? So the money is not like physically in my account. I have access to way more money because people have expressed, I want to lend with you. I want to partner with you before I have the ability to buy real estate with that money. Could I go and use all the money I've raised? Of course. Is it good to do so? Definitely not, because I know there would be a scalability issue. I cannot buy 10 properties just because I have the money to do so for my lenders. That would be irresponsible use of their money. That would be irresponsible for me to do, because we would not be able to onboard, set up, renovate, furnish, all that effectively and rent out the properties. It would not be the best use of money. So I have a lot of commitments. People have committed money to invest with me on future investment opportunities. I just don't have enough investment opportunities at the moment to feed every single one of the people that want to work with me. Hopefully that makes sense for that. Kathy, thank you. I'm so glad you were here. I said we do 3 hours. If there are no questions, we will stop. I'm always happy to go watch football. I mentioned the intentional investor community. Talk about safe withdrawal rates. Any questions you all have about personal finance, financial freedom, real estate investing, creative finance, deal analysis, capital raising, anything you have, I'm more than happy to help you. If we don't get another question, we'll call it a day. I just wanted to add extra time if you guys did have a lot more questions. I know I answered a lot of the questions that I see in here during the call, which is great. That's why I didn't want to answer them throughout, because I knew I'd answer them at some point. Darren asked, is your deal analysis system in the Wealth Through Real Estate program? Are the links to deal analyzing spreadsheets? My deal analysis system. So yes, my free creative finance real estate investing calculator and free conventional finance real estate investing calculator are there. I don't use those. I use my ultimate calculators. Those are paid. You pay one time and you get lifetime access to it and all the updates that I make. Those are the only calculators that I use to analyze my investments. I pull data from elsewhere, but I analyze my deals in that calculator. All the links are in there. They're in my link tree. They're on my website, michaelmnat.com, michaelmnat.com. You get it in my link tree that I showed previously, on my Instagram, whatever. That's everywhere if you need that. If you want the free calculator, it's there. I want you to use a free calculator. If you find that you want to go to a higher level, cool, then get the paid one. You get lifetime access for it. That couple $100 is going to save you tens of thousands of dollars, if not more, and your future investments is going to make you much more intentional investor. So I hope that explains what you were talking about. There is trainings in the classroom, as I showed you, in the Wealth Through Real Estate community. However, there's going to be 10 times the trainings plus in the intentional investor community. That's kind of part of what you are getting. I'm joining the intentional investor community. I have to add, if you are willing to pay and be part of the intentional investor, I have to add more value to you to help you scale your portfolio. And it'll be much more coherently organized, as opposed to having a lot of amazing information in different places. You're going to have a very step-by-step blueprint, essentially, to improve on all the things I previously discussed. Let's see. I suppose you sometimes run into coming back to a soft commit and they have lent out already. Yes, James. So there are plenty of times that Someone said they want to work with me and maybe they've already lent money out. Maybe they changed their mind, whatever it is. Yes. That's why I don't really talk about the amount of money that I have raised. I only talk about the money that I've raised and deployed. That's the 3 million. I've raised 5 plus, maybe closer to $10 million, but I have not deployed it. So I don't talk about that as a stat. I just know that I have access to a lot more money, but I'm constantly engaging with lenders, with buyers who maybe want to pivot to lenders, to people who are raising capital. And I'm constantly adding value to people, showcasing that I am very intentional with my investments. I have mastered the art of deal analysis. I am constantly giving value to other people. I'm helping other people do the same. I am very systematic about buying my real estate. I'm not just buying real estate to keep a count of units. I don't need 1,000 units for the sake of it to flex on other people. I could care less. The goal was financial freedom. Now I've slowed down the amount of real estate I'm going to buy because there's just no reason to buy 50 properties a year. I don't need that, right? I'm just going to buy properties that I know that are the best properties. I'm going to help other people get into real estate investments. I'm going to, what else am I going to do? I'm going to focus on maximizing cash flow in my investments as they are. I don't need to just buy real estate because I have access to money. I only buy real estate when it makes perfect sense to do so. And I feel very comfortable moving into that investment. So yes, there's always the risk of, someone soft committing and they don't have access to that capital. That's not a concern because I'm constantly raising money by connecting with people, talking to people. People are passively filling out my form as part of what I'm going to teach you in, what I teach in the Veteran Investor Bootcamp, and what you'll get access to in the Intentional Investor community is how am I systematically raising that money, connecting with the right people? How am I leveraging social media to do so? How am I leveraging all these other resources to do so? And how am I engaging with everyone? How am I raising the capital? What marketing material am I creating? What am I sending out to people? You're going to get all of that. Thank you. Thank you for all the positive words. Appreciate you, Laura. Yeah, definitely was great connecting with you, Laura. I'm glad you're here. Aaron, appreciate you, brother. Thank you. Thank you. Angelina, thank you for dropping the link. Alex, my friend, did your pivot from wholesaling to buying help with your negotiation and buying? Would you have done it differently if you could? And what would you have done differently if so? Yes. Great point. So because I had to learn so much on my own and independently and through books, wholesaling was phenomenal for me as a buyer because I did it differently than most. A lot of people lock up deals and say, okay, I think a buyer is going to want this. I don't know if they'll like it or not. I've always been very systematic about wholesaling. I was making sure I was connecting with buyers first before I started talking to potential sellers. I understood what buyers were looking for first. Then I would talk to sellers, and then I would underwrite and analyze and make sure that I was going to get the returns that my buyer wanted. So I wasn't spamming 1,000 buyers and saying, hey, I have this investment opportunity. I knew what a buyer wanted. Then I found that right deal. It was kind of like bird dogging, but it was very specifically wholesaling with a lot of intentionality. And the wholesaling that I did for cash and creative made me better. It made me a much better investor. If I were to go back in my journey, I would have had to done wholesaling to get the skills that I have. If I had access to the things that I do now, or at least this wealthy real estate community, deal analysis, all this deal analysis training that I offer, you don't actually need to go through wholesaling to be better at negotiating and buying, because you could just do that through all the stuff that I've done, right? You can leverage that to expedite your journey. So for me, if I could retain the information that I have now, or I had access to the information that I'm sharing with you all, even for free, wholesaling would have made no impact to my ability to buy real estate. It's actually a detriment to my ability to buy real estate because it's time consuming. The $10,000 assignment fees or whatever are not necessarily worth the time that I could be spending buying more real estate. But because I did not have access to the information that you all have access to now, it was a huge, huge benefit to where I'm at today. But that's because I did it intentionally. That's because I leveraged that to then become a better buyer. You get the shortcut. You don't have to go through that unnecessary journey because wholesaling sucks. Wholesaling is active income. Wholesaling is a job that you're not guaranteed to get paid. And if you're doing it the right way, it's going to cost you a lot of money in marketing. My friend Sam Singh is a killer wholesaler. He made a post saying, you better have $30,000+ of runway if you want to wholesale for the next 6 months, or some crazy amount like that. And it could be a lot more expensive than that for sure. Hopefully that answers your question, Alex. Of course, Anita. Yep. I just want to share what I've done, what's helped me specifically, what I would have done differently. I would have focused way less on stocks if I Like, once again, if I knew what I know now, I would have not even wasted my time on stocks, but I needed to do stocks. Stocks are the reason why I then was more comfortable investing in other assets. It was the barrier to entry, right, that I needed to do to invest my first dollar, to then be okay with losing a little bit of money. I risked money on options. I learned that wasn't for me. Pivot, passively invest in index funds. Understand, okay, here's when I'll retire. Without stock market investing, I would not have been able to do what I've done through real estate. Yeah, I don't think I would have been comfortable enough to do real estate. I don't know if I would have been comfortable enough to buy my first investment. But if I had to go back financially, it made no sense because I'm not banking on the stock market at all for anything anymore. So yeah, just talking about, being fully transparent, things I wish I knew then that I knew now that you all have access to now. Ronnie, how did you learn to best structure creative finance deals? The same way I learned to best structure conventional finance deals. I learned what I could with the information that was available. I then started applying it. I started analyzing a bunch of deals, right? And then I connected with real estate investors and understood what are they looking for? What could I have done differently in my analysis? What can I do next time I talk to a potential seller, right? That same strategy. And for creative finance, same thing, right? Access to the Sub-2 community taught me a ton about creative finance. At that time in Sub-2, we didn't have a lot of deal analysis and underwriting at the level that there is now in the Sub-2 community. We have Bo, who's constantly underwriting deals every single day for people. But how did I learn to best structure creative finance deals? Well, remember, I'm an engineer by trade. So I'm an engineer. I'm very math. I'm a spreadsheet guy. For the level of visionary that I am, very much a spreadsheet guy as well. And I learned by just literally running the numbers. I said, okay, what is the most important? If it's a Sub-2 deal, what are the most important things I can do to get the highest cash on cash return and cash flow on that investment? For seller finance, what are the most important things I should negotiate on or adjust to structure the best creative finance, best seller finance deals? Hybrid, in that combo, what's the best thing to focus on when I'm structuring the best creative finance deals, the best hybrid deal? Just continue going that route. Essentially was, how can I drive my cash on cash return up for the deal? I knew I would have infinite returns if I'm using someone else's money, but I still needed the deal to make a lot of financial sense. The deal needed to have as high cash on cash return as possible so I can pay my private money lenders and offer solid returns to my private money partners. So I was analyzing the deals and really just playing with the numbers, leveraging things like my creative finance calculator and things that were available before to then be able to determine what's the best way to structure various creative finance deals. Does that help, or do you have a more specific question? And that's like, in general, how did I learn to best structure creative finance deals? By doing the thing and then buying real estate and then learning lessons as I bought properties. Oh, I could have done this better. I should have spent less time trying to negotiate the purchase price or the down payment when I would have done a lot better for dropping the interest rate so I can increase cash flow, like things like that. Or does it make sense to focus on increasing cash flow? Does it make sense to reduce entry costs? There's only two things for cash on cash return. The equation is your annual income, right, divided by your entry costs. So either to increase your cash on cash return, you either need to increase your cash flow or decrease your entry costs. So I'm running the numbers on various scenarios to say, what is the most important thing for me to do, right? And your cash flow is your income minus your expenses minus your reserves. Your income, you can't really change unless you change your management strategy. Your reserves are there. You need to set aside reserves. So how can I reduce my expenses? And if I'm doing creative, how can I reduce the amount I'm paying towards the debt every single month? For entry costs, how can I reduce the cash to seller, agent commissions, whatever? How can I reduce these things to reduce my entry cost or increase my cash flow so that I can increase my cash on cash return? The better I structure these deals, the better the returns for myself and my partners and lenders. So you got to do the work. That's what I'm saying. There's no shortcut. At a certain point, it starts becoming easy and you're like, okay, I can quickly filter. Oh, it's not worth looking at my time. That's not worth looking at my time. It's not worth looking at that deal. And then how should I quickly adjust? What should I focus on first and foremost to be able to do that? All right, our last second questions. Go for it. Otherwise, I'm going to go watch it. The Patriots-Jets playing right now. If you need access to the QR code, I will pop it up one more time. It's funny, people are still joining and we're at the tail end of this thing. But if any final questions, Raif, In the intentional investor group, would it be possible to have a one-on-one brainstorming session with you to create a plan, optimize a strategy, outsource tasks and acquisition methods, etc.? I lack time and I need to build an efficient system which can work besides my full-time job. Right, brother. Luckily for you, I'm providing that blueprint to every intentional investor. We don't need to customize a one-on-one plan for you because it's kind of the same concept. Really, it's the same thing for how you're going to increase leads for your buy and hold business, how you're going to systematize and increase your ability to raise capital to buy your investments. What should what are the actions you need to be taking each day, each week, each month to move forward towards your goals? What systems and tools you use? It's the same thing for basically every buy and hold investor. You're going to choose what acquisition strategies make sense for you, what management strategies make sense for you, but the majority of it is the same thing over and over again. That's a big part of it, giving you my blueprint that has helped me scale to the level that I am now. What are the systems and tools that I've used to be able to get to where I'm at now, which is what the majority of people want to do. Buy and hold real estate, using other people's money and lend their money out for high returns or even equity in other people's investments. If we absolutely need to, I will help you one-on-one, but I really want to help as many people as possible. And the best way to do that is in a larger group setting. That's what really the veteran investor is for. If you want very customized approach, I will maybe open up veteran investor in January. Let's talk then. Intentional investor will help you. It'll lay the entire foundation. Everything veteran investor is getting, you will get access to. If you want even more personable than that, I do consultations. You can ask questions in the group at any point. I do weekly Q&As and deal analysis. Come in, ask your questions in there anytime. Or if you really want do it together support where we're really building all this stuff together and I'm strategically helping you do everything together, then maybe the veteran investor makes more sense for you, right? That's kind of the final scale. It's like wealth of real estate, free community, intentional investor, and then the veteran investor community. It's kind of the scale depending on what you're trying to do. Hopefully that helps, Rafe. Ronnie, for seller finance deals, how do you explain you will pay back a PML for entry fees? Well, it doesn't matter if it's seller finance, hybrid, creative finance, or sub 2. It doesn't matter what strategy. It could be traditional. Paying back your private money lender. How do I explain I'll pay back a private money lender? Well, I tell my private money lenders, hey, there's only going to be so much cash flow. I'm going to maybe generate $1,000 a month in cash flow on this property. A lot of it is going to pay your interest. I will keep the leftover. If you're lending me $50,000, I'm not going to generate enough cash flow to pay back your $50,000 loan. So one of the things I implement in my capital raising is understanding what are the various ways to handle that. I could sell the property if I have the equity to pay off the PML. I don't really want to do that. I want to hold real estate for the long-term wealth benefits. I could refinance the property, but if I'm buying at great creative finance terms, I don't want to refinance my overall loan and lose that 0%, 2%, 3% interest rate investment opportunity. I don't want to lose that, right? That's a huge reason why I bought that property. I can pay back the private money lender from a variety of other income streams that I have, from my other properties, from my, let's say, education stuff, calculators, whatever, my lending business. I could do all that, but I don't tend to do that. What I tend to do more than anything else is I refinance my private money lender, not the loan, not the sub 2 loan or seller finance loan, but the private money lender. I refinance that private money lender with another private money lender. Typically, when I'm doing that, I pay back all their interest and some of their principal. When I'm paying back that principal, let's say it went from $50,000 now to $45,000. And typically, because now I have a stabilized asset, the first PML, I was probably paying 12% interest because that's the startup phase of the property, the riskiest time of it. At that point, it's a year down, a year later, let's say, and I am now, the property's proven itself. It's paid off another investor at a higher amount, a higher loan amount, higher interest rate payments. At this point, when I'm refinancing the private money lender, I'm refinancing with another one, maybe at the same interest rate, but a lower principal balance, maybe the same principal balance and at the same interest rate, or I'm getting it at a lower interest rate because now it is a stabilized asset. The type of lender that wants 12% is different than the type of lender that wants 10% on a more stable asset. Someone with more money wants more security. Maybe that's what you do with your lending. You lend to at the 10% rate where it's much more secure and guaranteed. The property has more equity. It's past the first year. It's proved itself with a higher interest PML. You have a more stable asset that you're lending on. So more often than not, what I'm doing is I'm refinancing one private money lender with another one at better interest rate and at a lower principal amount because I've paid some of it back. I hope that helps you, Ronnie. Aaron, he says, prepare and bring your deal week to the weekly Q&A. Michael does an amazing job breaking it down. Thank you. Yes, I do. And I do it all live. I'm not pre-planning. I got no ability. You know, I don't want to see your deals in advance. I'm not even doing it as a test for myself. I want to show you how you would do it in real time live. If I'm pre-planning for it, it's not going to show you all the work that I'm doing to get there. You know, we're constrained by time, right? We're doing it for an hour. So certain things we skip. I'm not going to spend 25 minutes on how to find property tax for that specific property. Watch one of the videos that we go over, you know, estimating property taxes or insurance or whatever. We're going to analyze that deal for the acquisition strategy you have in mind, for the management strategy. Maybe we'll do multiple management strategies. Bring your deals and let's analyze them together. I will help you if you're a buyer, a lender, whatever. I will help you determine if that's a deal you should buy, lend on, partner on, raise capital for, you know, connect on, whatever. I will help anyone during those calls. All right. Last chance, y'all. I think we're going to call it quits. Let me drop in the chat for anyone who wants the link for school one last time. Yes, Raif. So it's month to month. If you only join for 1 month and you got all the value you need, excellent. That's all you'll need to do. If you need 2 months, 3 months, I mean, remember, it's not just the education that you're paying for that I continue adding to. You're also paying for the community. You're paying to be part of a smaller group, right, of more intentional buyers, lenders, capital raisers, connectors, people with deals. And I'm going to share, now that I am buying less and using less of the money I'm raising, I'm going to help share deals to you all to buy. I'm going to help share capital if you need that. As long as you are a proven investor, I will help you connect to more capital, right? I'm not going to raise the capital for you. That's your job, right? Like, you don't want to be dependent on me for your business. You want to learn how to do that, but I will help you guys do all that stuff. So yes, month-to-month payment, continue getting access for that. You can pay annually for a discount. It's up to you. Veteran Investor is a one-time payment, but it's a 6-week intensive boot camp. And then you get access to Intentional Investor after that as well. It's like a lifetime Intentional Investor access. Any other questions, y'all? I think we're good here. All right. I appreciate y'all being here. As crazy that we had as many people as we did. I appreciate that. Thank you all. Have a great night. Go watch some football, hang out with your family. I'm excited to do so. I will probably never do a 3-hour Zoom again. That was intense. We'll do shorter ones in the future. Thank you. Thank you all. Good night, guys.